Says it is conducting an internal probe after a report stated that it intentionally sold clients risky investments they did not understand. Matt?
Let's take a look at futures as we head into the live cash trade. We have green arrows here indicating that stocks will open higher. DAX futures are up 0.6%. FTSE futures are up 0.4%. So we could see the continent doing a little bit better than London, although it seems like today is one of those rising tide lifts all boats kind of things. U.S. futures, by the way, are pointing higher as well. Let's pull up the global macro movers screen, and I will point out that we're looking at a new era here for the global macro movers screen. It says, you can see there, equity indexes. So this screen, I'm so happy because it's finally in line with Bloomberg style. Here we say indexes rather than indices, which just sounds so pretentious. Tom Coppernell and Seth Reuter have put this together for us. I just want to give out a shout out to these guys because there's a lot of hard work that goes into making these incredible functions on the Bloomberg. Right. And Tom and Seth have made this one even better. So, with that having been said,
of course, was always taught to say indices, Matt, and I apologise if you always thought I sounded pretentious.
Well, don't British people sound pretentious anyway?
We do it without even trying.
I'm just joking. I'm just joking. They sound smarter, and maybe they are smarter than the rest of us. Certainly, in our case, that's true.
Okay, European equity markets then are opening higher. Let's get back to the markets, shall we, Matt? We're on safer territory there. That's as markets are once again caught between the prospect of more stimulus and a worsening pandemic. The World Bank has already trimmed its growth prediction for 2021 as the rollout of the coronavirus vaccine takes time. Joining us now, Shanti Kellerman, Investment Director at Brown Shipley. Shanti, on to more serious matters. Good morning. Thank you very much for joining us. So we have this downgrade to estimates from the World Bank. It seems the IMF could come forward with similar downgrades. We're talking about double-dip recessions in various parts of the world that we weren't previously, and yet we have stocks near all-time highs. Does that seem bubbly to you?
We actually think equity markets do have further to rise, so we're overweight. I think a lot of the stuff we're seeing is short-term disruption for this year. I think markets are looking through to seeing that we have plans in place for vaccine rollouts. There isn't any evidence that the vaccines won't be effective in some of these variants or that they can't be adapted for it. So I think when you get this news, it says, okay, maybe we push out reopening by a month or a few months, but ultimately the markets see a path to go through it, and that's why we still see quite a lot of good momentum in shares.
In terms of momentum, how much longer can this continue on markets, Shanti? I mean, it seems today 6 out of the top 10 most read stories on the Bloomberg terminal are about one asset or all assets being in bubbles. And everyone we talk to, Mark Cudmore included, seems to say, like, yeah, we know we're in a bubble, but we're going to keep partying until it pops. Is that a safe strategy?
So valuations are high largely because we have very low interest rates, and that makes any cash flows that you're receiving from bonds or from companies more valuable than they were a year or two ago. We think that interest rates are going to stay low indefinitely. We don't see any scope for interest rate rises before 2023. That's supportive of asset valuations. We also think governments will be more likely to overstimulate rather than understimulate. We've seen that with what President Joe Biden has proposed, what Treasury Secretary Janet Yellen has proposed as well. So while asset valuations are high, it just reflects our current low interest rate environment and the fact we're likely to have stimulus and spending and low rates for a long time.
And another sector that you might find assets that are fairly richly priced by historic metrics, Shanti, might be commodities, and certain commodities have done very well through the recovery, of course. How do you divide up the commodities world? Where are you looking for assets that will continue to deliver for you? Green infrastructure, of course, very much part of the political narrative. How does that tie in?
So we've moved to being more neutral on gold recently because we think the economy is in the early cycle and gold tends to not perform very well. So that's where we are on that asset class. We have seen a lot of money go into commodities recently as part of that trend toward assets that are a bit more geared towards growth and inflation. We do have some holdings in our direct equities that are more linked to, say, copper. We own some shares that have exposure to other mining sectors. We think that growth in China will continue to support the commodity sector. And then we also do see potential for more spending on infrastructure. So it's always something that's talked about every US presidential cycle, never really happens. But perhaps there is a bit more momentum for things like, creating green infrastructure. I think there is desire to do that in the UK and in the US as well.
Shanti, I think it's a great answer that you gave about these rising valuations. And of course, the low interest rate environment has been incredible. Again, to bring up Mark Cudmore, he wrote a macro piece this morning showing that borrowing for the COVID crisis has cost the U.S. basically nothing, has cost everyone basically nothing because of this environment that we're in. And there was a lot of talk as well about Biden's stimulus, how it's going to goose the economy, and he doesn't have to worry about the bond vigilantes, right? Nobody wants to come back as the bond market these days. But is there any chance that we see rates tick up? Are you at all concerned about that as a risk, in the near future?
I think, of course, it's a risk, Matt. Right? We would be it wouldn't be sensible for us to just discount that as impossible. So it's always a risk. It's something we watch. We've seen the inflation forwards tick up to just over 2% recently. So it is something to keep an eye on. And if those were to run away to 4 or 5%, that would be damaging. If the Fed were to decide to stop their quantitative easing programs, that would be damaging. We just don't think it's likely that any of those actors or those things will do that in the near future. And therefore, we think it's worth taking that risk with our clients' money that we manage because we think it will pay off for them.
And Shanti, thinking about the short term and how you manage that money, when you look at vaccine rollout programs, some investors tell us that they actually do see a link between where stock markets are trading, how stock markets have responded since the beginning of this year, and the success of various countries in implementing the vaccine rollouts. Is that something you're actually seeing work in terms of stock market performance?
I would say it's something we're looking at. We don't use it as sort of a quantitative input to say buy this market or buy that market. Maybe later in the year that will be something that becomes a bit easier because we just don't have that much data yet. And we also need to learn more about things like the vaccine effectiveness. We had comments in the UK over weekend that they don't fully know how much the vaccine can prevent transmission, which would have a huge impact on how much the vaccine actually allows you to open your economy. So I think this year, though, last year we were all focused on case counts, and that was the headline we looked at every day. Case counts, deaths. It's great to see that number of vaccines is now a data point that everyone's looking at and using that to think about how economies are evolving. So that's the really positive thing for me when we look at what's happening in the world, that we're just even looking at that.
Shanti, thanks very much. Thanks for joining us. Stay with us. Shanti Kellerman, Investment Director at Brown Shipley. Staying with us a little bit longer on the programme, 8 minutes into your trading week here on the European Market Open. The World Economic Forum is looking a little bit different this year, as you might expect. This year's so-called Davos agenda will see world leaders meet virtually this time to discuss the crucial year to rebuild trust. And Bloomberg will bring you a piece of that action, an insight into the narrative that's happening there. Today at 1 p.m. London time, America's top infectious disease expert, Greece's Prime Minister, and the CEOs of Philips and the American Heart Association speak to Bloomberg News Editor-in-Chief John Micklethwaite about the most effective responses to the COVID-19 crisis.
Looking forward to that conversation. Then at 5 p.m. London time, Bloomberg's Peter Grauer, Mexico's economy secretary, the managing director of the World Economic Forum, all joined together to discuss delivering social justice in the new economy. That'll be a fascinating discussion at 5 p.m. The event begins with a keynote speech from Chinese President Xi Jinping at noon London time. You can watch full coverage on your Bloomberg terminal. Just type live go, L-I-V-E go. This is Bloomberg. Just type live go, L-I-V-E go. This is Bloomberg.
Welcome back to the European Market Open. 12 minutes into Monday's trading session. A fairly mixed picture, actually, for European equity markets. Not quite as positive as maybe we had anticipated. In terms of the US futures picture, that still looks pretty positive, although it is mostly the tech names doing a lot of the heavy lifting there. Nasdaq futures point up by 0.8% here, a little bit more mixed in Europe, as you can see. Let's get to our individual movers, though. Siemens Energy, that stock in focus. They pre-released some of their results, sticking with the forecasts despite profit beating for the first quarter. So Siemens Energy up by 2.23%. HSBC very in focus and will be again tomorrow. The CEO is going to be facing questions tomorrow, so this week, here in the UK, over freezing accounts of some activists tourists in Hong Kong, so that's something to watch. It's currently trading down by 1.3% in London. IAG also down by 5.8%. That particular stock sliding as the UK considers further border closures. France is facing another lockdown, of course. We could get more news on that in the middle of the week. Matt?
So Prosus and Naspers are soaring today. They're the biggest gainers in South Africa. And you may ask yourself why. Well, Prosus holds Naspers' 31% stake in Tencent. We have a great story on the terminal about Tencent's $232 billion rally, which makes the Tesla rally look like something you'd see in a value stock. It's been an incredible run. The company is worth almost $1 trillion now. Tencent actually itself closed up 10.9% in Hong Kong trading today. Now let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Tiger Global has topped the world hedge fund rankings. According to LCH Investments, the industry reaped $127 billion last year. Human traders racked up record profits, while some quants struggled. Tiger Global generated $10.4 billion for clients after fees. Millennium Management came a close second. Deutsche Bank is probing the sales of certain investment banking products. It follows a report in the Financial Times about a profit-sharing scheme that sold people risky investments they didn't understand. The paper reports the bank is investigating a broad pattern of misconduct rather than an isolated incident. Deutsche Bank says it can't comment until the probe is finished. HSBC's CEO is appearing before a UK parliamentary committee to answer questions over the lender's freezing of accounts linked to Hong Kong activists. A former lawmaker in the city whose account was suspended says he was contacted by the panel and provided them with detailed information. HSBC has declined to comment. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura Wright in London. Now, the US Federal Reserve faces a crossroads. This week's meeting will see the FOMC attempt to balance a dim short-term economic outlook with a brighter one over the longer term, as well as how to press forward with monetary policy amid a huge fiscal boost. Mohamed El-Erian says that while expectation may be for the Fed to tilt away from its ultra-loose policy at some point, it is unlikely to do so for at least another year. Let's get into that conversation then with Shanti Kellerman, Investment Director at Brown Shipley. She's still with us. It's been an interesting year so far in the Fed narrative then, Shanti, because just a week or so ago, we were hearing all of this talk from various Fed officials sort of throwing the words taper into the conversation, even if not suggesting it was time to do anything like that right now, to taper the bond buying program. And we're waiting to hear from the Fed later on this week. How difficult is it for the Fed to get the messaging just right? Because, of course, they want the assumption to be that we have these low interest rates for a period, but they don't want the market to become complacent about that, I suspect.
Yeah, I don't expect to see any big announcements this week or huge shifts in language. I think what's important is they want to get across that they do have a plan for the future. And we see this with governments around the world where there's a tension between emphasizing that policy support and stimulus will remain in place, but then also credibly being seen to be planning for the future and having a path out eventually. So like you said, I think there is a balance between doing those two activities and making people aware that they are prepared and thinking about the future, but for now, nothing is really changing.
What kind of pushback do you expect the Biden stimulus to get? I mean, how closely do you track that sort of thing, Shanti? Because it seems like it's going to be difficult to pass a lot. He's going to be able to get some stuff kind of through reconciliation, but the filibuster is going to hold him up for the major legislation. These are, you know, the weeds of parliamentarian policymaking, but how closely do you need to follow this as an investor?
It certainly does matter. I think one thing to remember is we had the $900 billion package passed in December, and that is equivalent to just under 5% of GDP. So that will have an impact in the short run on some of the numbers we see about, even things like consumer confidence or, household leverage. So there is some time for him to work on this. You can view it in some sense as an opening gambit. Maybe it gets pared back a bit. But I think in the political environment, there will be political will to provide support for the economy. And the Democrats are very keen to be seen as a party that's supporting people. that's something that was co-opted a bit by Republicans with these huge swathes of the country feeling left behind. And I think a lot of this package is aimed at repairing some of those bridges and making people believe that the Democrats are at bat for the little guy.
And there does seem to be some expectation this morning that that fiscal stimulus will, to some extent, remain intact. Let me ask you about the earnings season, Shanti, because what is it that we're looking for from the earnings season this time around? Typically, obviously, you want to get the earnings news, you want to see the outlook statements, and I wonder, with such uncertainty or such expectation for better things in the second half of the year, how you're looking at that earnings story.
So I think expectations are actually not that high. So when you look at the markets, people are expecting revenue to fall in the US by about 10%, Europe's about 25%. That just reflects the different sectoral makeup of those two areas. I think people will be looking to see that companies have adapted. So if you look at, a lot of companies this time around in lockdowns have done better. They've had more shifted to online. They've adapted their manufacturing processes to be safer. So I think people want to see evidence that companies are adapting and that, Q4, they had those improvements relative to earlier quarters. And then they also want to know what their plan is to get out, essentially. I think people will cut companies a little bit of slack because obviously it's about the forward outlook, and that's more important than necessarily what happened in Q4 last year, because that's over.
Shanti, thank you very much. Shanti Kellerman, Investment Director at Brown Shipley. Shanti will be continuing her conversation with Matt and I on Bloomberg Radio. That's at 9 a.m. UK time. You'll find us there on Bloomberg Radio at the top of the next hour. Coming up here on the programme, though, France may face another lockdown within days. Reports say the government is concerned about the UK variant of the virus. We find out more. That's up next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are looking at stocks, a broader stocks index, the Stock 600. That is rising 0.2%. We see the individual indexes across Europe also, well, kind of a mixed picture, frankly. The FTSE, the CAC, and the IBEX are trading down. The DAX, the FTSE MIB, the AEX are all trading up. So a little bit of a mixed picture here in Europe right now. In terms of the best performing industry group, it looks like tech is the best performer on the stock 600. So those technology companies are rising, but travel and leisure are falling even further than tech stocks are rising. And that's where you see the swing. Travel and leisure down 1.6%, tech stocks gaining. Now, France may go back into lockdown within days. French media reports say Macron's government is concerned a new wave of infections driven by the more contagious UK variant of the virus could spiral out of control. Joining us now is our reporter, Maria Tadeo, to talk about the situation in France. So, you know, how bad is it? I thought they had gotten the spike, the infection spike, under control.
Yeah, they had for a while, but Matt, the concern now it's about mutations that may be to come, and they point to the UK as really your showcase of a perfect storm that could really spiral out of control if those mutations take hold. Now, as you mentioned, if you look at the French press this morning, they're operating on the basis that a new lockdown will be announced this week, possibly Wednesday, but they do point to a very serious debate within the French government, whether they go for a lockdown that looks very similar to the one that we had in March and April last year, in which everything was shut down, and to go out on the streets, I'm sure you remember, you needed the special document that was called attestation to be able to leave the house, or actually go for something that is much milder potentially, and that would see schools reopen and also non-essential stores also reopened with reduced hours. It is interesting to say that the head of MEDEF, that's the French business lobby, was today on the French radio saying that no matter what happens, whether or not there's a new lockdown, stores need to stay opened with different ways, perhaps with a different protocol, with different hours, but they need to stay open. It's the third time we've seen stop and go in the country, and he notes that this would be crippling for smaller businesses if they have to fully shut down again.
More broadly, when it comes to the rollout of the vaccine across Europe, then, Maria, pharmaceutical companies have been coming under pressure over a lack of deliveries in Europe. What's going to be the response?
Well, Anna, this is a real talker today in Brussels. I would go as far as to say this is the biggest story that is happening in the European Union today. Again, this goes back to Pfizer, which has been undercutting or delivering doses for a week now. This is because of a production issue that they're having. They're upgrading their capabilities. Over the long term is good, but over the short term it is not. And then also AstraZeneca on Friday dropping a bombshell on Europe, saying that perhaps some of the deliveries will have to be majorly cut because of a glitch. Now, the Europeans say they want to know what this glitch is about, and that this contract, they insist, needs to be honored. Now, the Italians, just to give you an idea, they went up the scale and the tone this weekend by saying that if they don't comply with the doses, which in principle should be delivered on a weekly basis, they would consider perhaps also legal action. The Italian Prime Minister Giuseppe Conte said all of this at this point in the midst of a pandemic is just simply not acceptable.
All right, Maria, thanks very much. Maria Tadeo there, talking about the prospects for another deeper French lockdown. Coming up, the COVID-19 pandemic saw companies in almost all industries slash their ad budgets in 2020. Up next, we're going to speak about the future of advertising with WPP CEO Mark Reed. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 30 minutes into the session, let's take a look at equity indexes. We have kind of a mixed picture here in Europe. Very mixed, in fact. Here you can see the Stocks Europe 600, the broader European index, gaining 0.2%. The FTSE, however, is down about 10 points, or 0.2%. The DAX is up fractionally, and the CAC 40 is falling this morning. So a little bit of up and down on optimism for stimulus, but concern about the pandemic and some inefficiencies in the vaccine rollout. Here you can see a breakdown. The group ranked return screen shows you the industry groups on the Stock 600. Basic resources, tech and telecom stocks are gaining, so some technology as well as defensive stocks are up this morning. Travel and leisure taking a big hit, as well as banks and retail stocks. Let's get the Bloomberg First Word News right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Protests have erupted across Russia, demanding the release of jailed opposition leader Alexei Navalny. Braving clashes with riot police and freezing temperatures, tens of thousands gathered in dozens of cities. According to monitors, at least 3,500 people have been arrested. The US and EU are calling for them to be freed. The Trump administration's top environmental lawyer allegedly worked with the president to try to cast doubt on the election results. The New York Times is reporting he was planning to oust the acting attorney general and lend legal support to lawsuits challenging the ballot. He disputes the allegations. The world is witnessing the greatest rise in inequality on record. According to Oxfam, the poor are likely to feel the effects of the pandemic for years, but the mega rich have already bounced back. It's calling on countries to address the disparity, including reforming taxation and cancelling the debt of developing countries. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London. So the COVID-19 pandemic saw companies in almost all industries slash their ad budgets in 2020. Now WPP is trying to revive revenue by rivaling some of the fastest growing e-commerce companies. The London-based agency is focusing on designing online sales platforms, apps and customer membership programs. Can 2021 bring about a renaissance for the ad industry? I'm pleased to say we're joined by Mark Reed, WPP's CEO. Mark, very good to speak to you and lots to discuss this morning. Thanks for joining us here on Bloomberg Television. Let me start with advertising budgets and sort of taking the long view of where you think they have been and where they will evolve to as we go through 2021.
Yeah, well, I mean, there's no doubt that at the start of the pandemic, many of our clients, naturally sort of slammed on the brakes and did cut their spending. But I think as we went through the year, clients moved from that sort of period to sort of react much more to recovery and renewal. And actually in the third quarter, we saw budgets with half of our top 30 clients grow and half of them decline. In our capital markets day back in December, we said we thought our net sales for 2020 would be down around 8.4%, which I think is a much more resilient performance than many people would have expected, given the economic shock and the typical impact on ad budget. Certainly better than it was in 2009. And looking ahead, I think that clients are planning to increase spend, really quite substantially. GroupM, our media planning and buying company, expects ad budgets in 2021 to be up around 12%. And that's driven by many of the companies looking to get back in the market, working with, for instance, cruise lines, getting people back onto cruise ships. I think that the advertising budget has really been driven by three things: what I call streaming, gaming, and shopping. And we've seen e-commerce budgets in 2020 grow as much as 25-30% as companies look to spend money in digital media. So clearly, a lot of the growth is going to be in digital media this year and next. But I think we expect a pretty broad-based recovery across all media types in 2021.
Where do you see, in terms of regions, Mark, where do you see the strongest recoveries? What are the outlier regions?
Look, I think that the recovery is going to be pretty much true on a global basis. When we look at China, where we have around 10,000 people at WPP, business has been recovering, really since the middle of the year. I was talking to our team in India, and actually India has seen, good recovery already in, August, September, October, particularly with the IPL coming back online, and that's expected to continue. And here in the UK, we do expect to see one of the strongest rebounds in 2021, given the depth of the drop in 2020. In the US, as ever, is a particularly resilient market. So geographically, I think the rebound is going to be, pretty strong across the board. One of the big differences in the last 2 years has been the strength, particularly in packaged goods companies. In many ways, they benefited from a lot of the trends in COVID, restocking and people doing more grocery shopping. With a lot of healthcare and technology clients, and clearly they're benefiting. One of the strains of the pandemic, sadly, is the impact on small businesses, and on whom the economic shock has been felt more greatly, I would say. And WPP, to some extent, is in a fortunate position that we tend to work with many of the larger companies in the world.
And given what we've seen in markets over the last 12 months or so, Mark, are you homing in on any acquisitions? I know WPP has been very acquisitive in the past, and you have a different strategy, perhaps. Some analysts were suggesting recently you had to shrink in order to grow. So what is your sort of restructuring / acquisition strategy at the moment?
Yeah, I wouldn't say that we've been shrinking. What we've really been doing is really trying to refocus the company, simplify the business, and really integrate our analog and digital operations. And through the Kantar transaction, we actually came into the pandemic in a pretty strong position financially, and that does give us opportunities. And we are looking at investing in areas of marketing technology, in e-commerce. And we're currently working with 8 of our top 10 clients on e-commerce, and that's really a major opportunity for us at WPP. As all companies figure out, how to compete with Amazon, how to get their products directly in the hands of consumers, and that really applies, across all sectors and areas. And a lot of work we're doing, in the areas of data and data technologies, as clients try to figure out how to use the data that they own and activate that through their media programs.
How difficult is it, Mark, to get good pricing if you have Facebook and Google working together on that front? Where can you go in this, what looks like oligopoly of digital advertising?
I think, from our clients' perspective, these businesses are driven by auctions. And so for us, scale doesn't come from volume anymore of media spend. It comes really from insights into data and the performance of these platforms. So we work really to help clients, gain an advantage over the platforms, really by knowing more about their customers than the platforms do. And that's clearly not easy given the amount of data that the platforms has. But that's one way in which we can help our clients really benefit. I think it's true that greater choice is better for competition, and we do see a number of advertising platforms growing. Amazon is one of the fastest growing advertising platforms. Clearly TikTok around the world has been growing very, very rapidly during the pandemic. Now has other challenges from a political perspective, and we'll see in the technology companies' earnings this week that their power, I expect, we'll see very strong results, and we'll see that their relative power has grown, and that will naturally raise questions about, what should be done about that.
Yes, indeed, and a lot of people asking those questions around regulation, Mark. In the UK, in post-Brexit UK, I know that the Prime Minister has been consulting business on where we should see regulations dialed back a little bit, perhaps. I wonder if you have made any suggestions or have anything in mind. GDPR clearly was something that changed the online advertising world just a little bit. Is that somewhere you would like to see changes?
Well, I think that consumer privacy is very important actually, and many of the changes through GDPR probably are in the long run the right thing to do to work out how to do it. So I'm not sure the issue is to sort of scale back regulation. The reality is here in the UK we do have fantastic industries, the media industry, global players like WPP, really strong companies in TV production, global players in the music business, pharmaceuticals. Look at the impact AstraZeneca has had, on the vaccine, financial services. So I think we do have very many strong industries in the UK, and I would be looking really to how we can, accelerate the growth in those industries and how we can get behind, many of the trends that are taking place in the economy, the move to a low carbon economy, the growth in e-commerce. In many ways, the UK is actually a leader, a world leader in e-commerce. And it's to some extent somewhat frustrating to read of the sort of Brexit regulation and how that's impacting, the friction in trade is impacting many e-commerce retailers hoping to export to Europe. So there are things that need to be done. But, I'm optimistic about the future for the UK economy if we can get behind, many of the sectors that we have that are growing strongly.
Mark, one of my favorite things to do in London, if I'm there with any free time at all, is go to the Natural History Museum. And you work closely with the Natural History Museum. How do these organizations cope under lockdown? I mean, how difficult a time is it for an organization like the Natural History Museum?
It's not easy, but actually, I think all of us have learned, haven't we, to connect digitally. I mean, the last year, and other people have observed this, has shown an explosion in innovation. People figuring out ways to transact and ways to trade. Look at the growth. I've got a list of 80 different restaurants in the UK by email in London doing restaurant kits that you can cook at home. And at Natural History Museum, it's been no different. They spent many years figuring out how to get their visitors to give them their email addresses. And one of the advantages of advanced reservations was that everyone gave them their email address. And now they have the most amazing contact list to which to build relationships. Many schools are looking for natural history content. And I think that, when these organizations come back, many of the issues that they address around climate change and the environment and biodiversity clearly are going to be more important. I think people are going to be thinking a little bit more about what matters in their life. And, great institutions like that can, really help educate and broaden people's minds.
Mark, thanks very much. Thank you for joining us and giving us your time this morning. Mark Reed, WPP's CEO. Coming up, thousands of Russians protest over Navalny's jailing. The Kremlin tries to downplay the demonstrations. More on that next. This is Bloomberg. Welcome back to the European market open. 44 minutes into the trading session and things looking a little more mixed than perhaps anticipated, although we're eking out some gains of 0.3%. To the upside, you see technology stocks, and that's in keeping with US futures, where Nasdaq futures are up by 0.8%, outperforming the rest of the market. And it's similar here because travel and leisure leads the laggards this morning, down by 1.4%. So protests have erupted across Russia over the weekend, demanding the release of jailed opposition leader Alexei Navalny. Braving clashes with riot police and freezing temperatures, tens of thousands gathered in dozens of cities. According to monitors, at least 3,500 people have been arrested. The US and EU are calling for them to be freed. Joining us now is Elizabeth Braw, American Enterprise Institute resident fellow and a regular commentator, of course, on matters Russian. Elizabeth, good to speak to you. What do you think is the near-term implication of the arrest of so many people in Russia after these protests?
Well, I think the main reaction will come from the West, from for example, the EU, from the United States, and they will condemn these actions, these arrests, and the brutality, and will try to impose sanctions on Russia, on Russian officials, Russian leading politicians. I think that's how far it will go. I think the longer term question is what sort of change this will bring within Russia, because this is a familiar picture. Protests, then the West reacts, and not very much happens in Russia itself as a result of these protests.
Does the Western media blow these protests out of proportion, Elizabeth? I was talking to a very left-leaning journalist here in Berlin yesterday, and he said the West always makes a bigger deal out of this than it actually is in Moscow.
So that is the challenge. I think in any authoritarian country, when we see protesters or activists who think like us, we get excited and we proclaim that the end is nigh for the regime in that country. But that's seeing the situation from our perspective, from the perspective we would like, or from how we would like that country to develop. And we are not seeing it from the perspective of the people in that country. And we have to remember the people who are protesting. There are many new protesters this time around in Russia, but it's not the majority of the country. Obviously, it's still a small minority. And I think the problem for Navalny, I mean, he's an extremely brave man, but the problem is the more support he gets from the West, the more he can be characterized as some sort of Western stooge, which he is not.
Yeah, it was interesting to hear so many of the protesters talking about being there and protesting for the first time, which added another dimension to it, I suppose, Elizabeth. Let me ask you about US-Russia ties at this point and how this will play in. Clearly, these relationships have been tense since the annexation of Crimea. That's 2014, so some 7 years or so ago. How do you see the new administration, the Biden administration, putting its mark on this relationship? Will this play into that?
I think at the very least we'll have a clearer line from the Biden administration. Under Trump, we had this really peculiar mix of toughness on one hand vis-a-vis Russia, but then Trump's very unusual, almost subservience to Vladimir Putin, which clashed with his own administration's policies vis-a-vis Russia as a country. So I think that just confused everybody, including Russia. And I think what we'll see now is a clearer line and a quite assertive line towards Russia, but one also built on wanting to find cooperation with Russia, including on matters of arms control. And we've seen that Biden has just said that the US wants to extend a key nuclear treaty. So that's an important step. So more clarity and more a more firm line overall, with no subservience towards Vladimir Putin.
What about more pressure on Merkel? I mean, yesterday I saw, or Saturday, I guess I saw the protests going through Berlin here, and there were a lot of signs not only about Navalny, but about Nord Stream 2. Just another reminder that the Merkel government wants to pay money to the Putin administration in return for gas. So is that going to go ahead? Is that because their excuse, I guess, is, well, it's already done, so we might as well give him the money for his product, and plus they need his product, right?
This is the dilemma for Germany. So we have to remember that money is not going to Putin himself or to the government. It's going to the Russian company that is the main owner of this pipeline. And it's a European consortium involving other Western European companies as well. But this is the problem for Germany. The pipeline is a way of doing business with Russia. Well, it is business with Russia when other countries are saying we shouldn't increase the amount of business we do with Russia. But we have to remember this is not new. It has been going on since the Cold War. During in the 80s, the Reagan administration constantly criticized West Germany for buying gas from Russia. So it's not new. It has been going on for decades. But Germany at this moment is in a really tough spot, and the Biden administration wants to. It's not a fan of Nord Stream. I don't think it will continue the Trump administration's policy of constantly imposing unilateral sanctions on companies involved with Nord Stream, because it really opens the door for other countries to impose unilateral sanctions on American companies. And I don't think the Biden administration or any American would want that. And it's also not particularly good diplomacy towards Germany. But I think, Angela Merkel, if this hasn't been resolved by the time she leaves the chancellorship, it will be a dilemma that her successor will have to take over. It's a very tricky situation for Germany.
Elizabeth, thank you very much for your thoughts. Elizabeth Braw, American Enterprise Institute resident fellow. Thanks for joining us. 51 minutes into our European trading session. Coming up, are assets too complacent about the vaccine rollout? That is the question we'll put to the Market Live team. Laura Cooper will join us from that Market Live team, of course, to give us her thoughts. Plus, we're hearing at this very moment from Christine Lagarde, the ECB president. She's giving a keynote at a virtual event called Green Banking and Green Central Banking. What are the right concepts? You can watch the whole thing on the terminal at Live Go. Some of the headlines so far: climate risks are not adequately priced, she says. The ECB is to launch a climate change centre. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session right now and looking at some mixed trading here. The FTSE and the CAC 40 are down. The DAX and the broader stocks Europe 600 index are up, but we always have become defensive stocks that are gaining. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist, and there's real concern about another lockdown in France. Last week we had all the deeper lockdowns and extended lockdowns in the UK and Germany. Laura, are investors reaching for stocks, tech stocks like Delivery Hero as defensive plays because, what's the one in the UK? Ocado is going to gain on the fact that nobody can leave the house?
Well, certainly I think that is playing into the downbeat price action today. Just the fact that investors are shifting focus away from this upbeat fiscal kind of stimulus euphoria that's coming out of the U.S. and instead turning to the looming double dip recessions that are spreading across Europe and the fact that these lockdowns are going to extend for longer than markets expect. So I certainly would expect that those secular growers like tech that continue to benefit from this low rate environment and the kind of haven bids will continue to be supported. Whereas, those reflation trades that we've seen really just outperform since November and quite remarkably this year are starting to stumble because we aren't yet getting confirmation that we are going to see kind of upbeat recovery prospects as vaccine rollouts slow.
Yeah, we want to see some comments around outlook, normalization from those kind of businesses, I guess, through the earnings season. Laura, thanks so much. Laura Cooper, Bloomberg Markets Live macro strategist. That is it for the European market open. Surveillance is next. Matt and I on a sunny day in London are off to Bloomberg Radio. This is Bloomberg.
The 2021 outlook darkens. The World Bank downgrades its growth forecast as new COVID variants, crippling lockdowns and vaccine delays chase optimism away. Deutsche Bank says it's conducting an internal probe. This after a report that it intentionally sold clients risky investments they did not understand. And Davos goes digital. China's President Xi Jinping makes his first public remarks of the Biden era in the keynote address of the virtual summit. Merkel and Macron follow. Well, good morning, everyone, and happy Monday. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. We do have a bit of snow, actually a bit of sun, I was going to say, apart from the snow that we had yesterday. Now, the focus firmly, of course, on the markets. The focus not only on euro-dollar, but what's happening with the banks. We're also getting some IFO, January German Business Confidence Index, coming in at 90.1 instead of the estimated 91.4. So it's a little bit worse than expected. If you look at global stocks, well, investors are focusing on the prospect of additional fiscal stimulus, but also some of the support that the Federal Reserve policy can put in place amid this worsening pandemic. So the dollar is actually slipping, and then we have quite a lot of tech earning reports, Treasury yields edging higher. Now let's get straight to the Bloomberg. First word news here in London is Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is warning that coronavirus vaccines may be less effective against new variants of the disease. Speaking to the media on Sunday, Health Secretary Matt Hancock says tough border controls are needed to stop more of the virus coming into the country. The UK is conducting trials of the vaccine on the new mutations of the virus. It has already inoculated more than 5 million people. Now, protests have erupted across Russia, demanding the release of jailed opposition leader Alexei Navalny, braving clashes with riot police and freezing temperatures. Tens of thousands gathered in dozens of cities. According to monitors, at least 3,500 people have been arrested. The US and EU are calling for them to be freed. And the world is witnessing the greatest rise in inequality on record. According to Oxfam, the poor are likely to feel the effects of the pandemic for years, but the mega-rich have already bounced back. It is calling on countries to address the disparity, including reforming taxation and cancelling the debt of developing countries. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, for the markets, the focus this week, of course, is in D.C. on stimulus talks and the Fed meeting. Plus, earnings across the globe will give us a picture of how companies are doing. Microsoft, Apple, Samsung, UBS, to name a few of the earnings out. Well, joining us now to talk about all of this is Mark Cudmore from our MLive team. Mark, good morning to you. Good afternoon, actually, because you're based over in Singapore. What is the market looking at right now?
Well, as you mentioned, I think probably the biggest issue is the Biden stimulus package and how watered down or how delayed that will happen until it gets delivered. I think there's again been another report coming out this morning based on a tweet from Bernie Sanders talking about how he might be going down the budget reconciliation route. And if that is the route we go down, we can expect it to be quite an optimistic in terms of what the actual package will eventually be. But of course, that does play out to timing. As for the FOMC, which is obviously distracting, I think that, you know, obviously we're not worried about any policy tweaks. It's more about the view on the economy. And I think it's one of those times, and this does happen every so often with the FOMC, where if they sound too positive, that might actually be more of a negative for markets, because it might mean that investors bring forward scheduled tightening on the policy side.
Mark, overall, how does the market look at some of these additional lockdowns? How do they look on, you know, some of the fact that actually a lot of countries in Europe are certainly behind vaccine scheduling?
Yeah, I think it's really interesting on the vaccine versus virus narrative. There's a very, very different perspective depending on which part of the world you're in. And it's not even just regional. It really depends on which country you're kind of getting a narrative in the local media and what kind of personal anecdotes you're hearing about the distribute hiccups. So some people investors morning thought we were real risk off today, and they were quite surprised by the resilience of markets because they said their weekend news was all about how the vaccine distribution has gone very badly. There's been a lot of hiccups. We're not getting the supply through, and the new variants are going to overwhelm it, and they kind of came in very negatively. And then other people are very much focused on we're about to get maybe the J&J one approved soon enough, or at least the phase 3 trial. We're continuing to get more and more vaccines delivered every day, impressive numbers coming through, and it's probably before the end of this month or around then that we're going to have that that great psychological crossover point where more people will have received the first dose of vaccine than have officially ever had COVID-19. I think that will be quite an important point. So investors are really, really torn in this issue. My summary is that, you know what, there's probably a little bit of excess optimism, complacency there, but I'm not sure there's enough going wrong to really derail markets in isolation. I think if we're going to have a serious kind of risk-off correction at any point, it's got to come from some other catalyst, not just because vaccines are a little bit slower than we thought a week or so ago.
Mark, what's your take on some of the earnings? So I know you mentioned a few, but is it the tech earnings that will give us an idea also on what certain market participants could actually latch on?
I think for earnings, obviously tech is going to be a big one again, but I think it's more likely to be a risk-off catalyst than a positive one. So maybe contrary to my previous answer, where my underlying bias, I am quite constructive at the moment. I think the underlying narrative remains the same, that we've got more fiscal stimulus coming, we've got more support from central banks. There's still people who want to chase assets, even though they're not cheap, even though valuations are expensive. There's no reason to turn risk off now. However, earnings aren't going to provide us much more upward momentum. They've been quite strong so far, very strong. But whisper expectations were super high. Everyone knows earnings are going to be really good. So even if they continue to beat and they continue to be really good overall, it's not really going to change that narrative much. It's not going to give us extra upwards. However, if there's suddenly some negative surprise or some negative shock, particularly in the tech space, that could be a little bit of a catalyst for a risk-off period.
Great, thank you so much, Mark Cudmore there from our MLive team, of course, with some great coverage. I urge everyone to go out and check out our live blog, MLIV Go. Now, coming up, we speak to Mario Greco. He's the chief executive of Zurich Insurance. We talk about some of the catalysts. We talk about markets. We talk, of course, about climate change as well. That's coming up next, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, of course, it is the World Economic Forum, but not in Davos because it's being held virtually. This time last year, we spoke to Mario Greco. He is Chief Executive Officer at Zurich Insurance about the impact of climate change on the insurance industry, the low interest rate environment, and the outlook for 2020. Now, clearly, 2020 was an unprecedented year with a lot of changes. So what is he expecting in 2021? Well, joining us now, I'm delighted, is Mario Greco. He's the Chief Executive Officer of Zurich Insurance Group. Mario Greco, thank you so much for joining us. A very different type of interview than what we did last year, where, of course, we were talking about Wuhan without really realizing the impact and how big it would actually become. How do you see the economic recovery going forward, given all of the unknowns about lockdowns and vaccinations and actually how many businesses will go under?
Yeah, we're optimistic about this year. We think that progressively the economies will get stronger, US especially, but Europe will also follow the recovery of the US markets. We think the vaccines over time, together with the prevention measures, will lead the economies into a stronger second half. And so we expect a much better 2021 compared with the challenges of 2020.
Mario Greco, do you believe that this recovery, this COVID-19 recovery, post-COVID-19, will be both a global recovery and also will be a green recovery?
I think it will be a global recovery in 2021. And I think then 2022, we need to probably expect to see a slowdown after it. There has been massive amounts of support injected into America, into Europe, into Asia. And all these amounts will boost 2021. Harder to see, though, this sustaining itself in 2022. But definitely we think that 2021 will have a positive benefit from it.
What's your biggest hope for climate change, given we have COP26 today, this year around the corner, and we have also a new U.S. administration?
Yeah, first of all, it's extremely promising and reassuring to see that the U.S. administration has rejoined the Paris Agreement. The appointment of Kerry as the climate czar, again, is incredibly promising. Climate is our biggest threat. We'll get over this pandemic. We will resolve it. Climate is something where we will need to put the same efforts we used to fight the pandemic. And the pandemic has, taught all of us a big lesson about how effective we can be if we work together. We need to do the same on climate now.
Mr. Greco, there was, of course, a High Court decision here in the UK about the relationship between insurance companies and some of the claims related to COVID-19. How does it change the future relationship between businesses and insurance companies with these sorts of pandemics? I mean, we hope we don't have another pandemic around the corner, but does it change your outlook?
First of all, I think we will have some other pandemics. The world, a global world, is open to the risks of viruses spreading quickly around the world. We've been knowing that a pandemic will come, and we know that there will be a next one. Second, there will be other similar catastrophic risks. We're very concerned about cyber risks. And of course, climate also can provoke some very bad consequences on countries or continents. I think we have to work together, public and private. This is what we have been saying from the beginning. Private companies cannot resolve this, neither financially nor socially. We need to have cooperation. Global events cannot just be resolved by insurance companies.
How will you deal with people that don't want to be vaccinated? How will life insurance companies actually deal with policyholders that refuse to have a vaccine?
That's a very difficult question. I'm seeing even in my country, Switzerland, that not everybody wants to have the vaccine. I think it's up to the government to respond to this, or to convince, or to explain. I think it's also understandable that now, being in the first days, that people have anxiety and hesitations. But eventually, history of the world has showed us that the only cure against this pandemic, it is with vaccines. In these cases, even more evident than before that we need to be vaccinated. For insurance companies, I don't think this is really something we can take actions on. We have been trying to help the customers as much as we could, and we will continue being supportive of customers, even if they're scared of getting the vaccines. But it is really something that the governments have to address.
Mr. Greco, give me a sense of what you're expecting exactly in the next 6 months and then 12 months. We talked a little bit at the beginning of the interview about what kind of recovery you're expecting, but what will your priorities be in the coming 6 months?
So from the financial market standpoint, we expect the markets to be stronger in H2 than in H1. I think H1 will still have, especially this initial quarter, the impact of the infections, and the vaccines are picking up, but kind of slowly. The second half of the year will be much better, much stronger for the economies, and we expect GDP growth to accelerate. For us, the priority this year is to manage the hardening of the rates, especially in commercial insurance. The hardening is continuing, has been extremely strong last year. The beginning of this year has been equally strong, and that's an opportunity for us also to improve the quality of our books and keep improving our profitability.
Where do you see the interest rate path going? How much? I know we've talked about this in the past, the fact that actually negative rates are a real burden on financial companies, on insurance companies. How do you see that progressing in the next 1 or 2 years? If we stay lower for longer, how can you adapt?
Yeah, there could be movements we expect this year. There could be some movements up of the interest rates and the yields. But the forecast we have is low for long, which means that the business needs to be tightly organized for that. In the life business, almost 80% of what we do is protection business, which does not have any guarantee embedded, and the rest is unit-linked business, which again does not have a guarantee. The guarantee business does not have in life, any real opportunity for the next years. Altogether, I think we expect this to continue for quite a number of years.
And Mr. Greco, do you see a real difference in what region is actually going to recover first or is recovering first? Do you see a discrepancy between, for example, Europe and Asia? And can Europe catch up depending on, vaccine acceleration? Can the U.S. catch up if they get a handle on the pandemic in terms of the economic recovery that follows?
Yeah, I think Europe especially has to speed up on providing the vaccines. The vaccination plan in Europe is, I would say, a quarter behind what it is in Asia and in the US. And that's a competitive risk to be a quarter late. In terms of the financial support, Europe has been incredibly decisive. Never seen it before. Now, I think the opportunity is to use these funds also to support the green economy plan, which is, for us, the most important decision that Europe has taken over the past years. And we will be very keen to support that as insurance company or as Zurich.
Thank you so much, as always, for joining us. Mario Greco there, the Chief Executive Officer at Zurich Insurance Group. Now, coming up, we'll have plenty more, of course, on COVID-19, the pandemic. France may face another lockdown within days. Reports say the government is concerned about the UK variant of the virus. We find out more later in the program. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Tiger Global has topped the world hedge fund rankings. According to LCH Investments, the industry reached $127 billion last year. Human traders have racked up record profits, while some quants struggled. Tiger Global generated $10.4 billion for clients after fees. Millennium Management came a close second. Deutsche Bank is probing the sales of certain investment banking products. It follows a report in the Financial Times about a profit-sharing scheme that sold people risky investments they didn't understand. The paper reports the bank is investigating a broad pattern of misconduct rather than an isolated incident. Deutsche Bank says it can't commit until the probe is finished. Now, Philips expects growth to be resilient in 2021 with long-term opportunities from the pandemic. The Dutch healthcare firm is seeing growth in diagnostics and imaging, where sales up 3% last year. It sees coronavirus driving a long-term shift towards virtual care, boosting demand for its equipment.
In the supply chain, shipping costs are currently much elevated versus the past. These are things that we need to cope with. At Philips, we are always looking for our own transformation to drive productivity, and we were able to deliver on our productivity targets despite some of these headwinds.
And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leah. Now, as we mentioned, the World Economic Forum is looking a little different this year. This week's so-called Davos agenda will see world leaders meet virtually to discuss a crucial year to rebuild trust. Today at 1 p.m. London time, America's top infectious disease expert, Greece's Prime Minister and Chief Executives of Philips and the American Heart Association speak to John Micklethwaite about the most effective responses to the COVID-19 crisis. Then at 5 p.m. London time, Bloomberg's Peter Grauer, Mexico's Economy Secretary, the Managing Director of the World Economic Forum, discuss delivering social justice in the new economy. The event begins with a keynote speech from China's President Xi Jinping. You can also follow, of course, that full coverage right here on LiveGo, L-I-V-E Go, if you're a Bloomberg terminal user. Now, coming up, joining us exclusively from virtual Davos, we speak to the Standard Chartered chairman. He's Jose Vinales. We talk a little bit about working from home. Of course, we talk about that pandemic and how it will change the banking landscape. That's coming up shortly, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg First Word News. In London is Leanne Garrett. Hi, Leanne.
Hi, Francine. Protests have erupted across Russia demanding the release of jailed opposition leader Alexei Navalny. Braving clashes with riot police and freezing temperatures, tens of thousands gathered in dozens of cities. According to monitors, at least 3,500 people have now been arrested. The US and EU are calling for them to be freed. France is set to go back into lockdown within days, according to newspaper JDD. There are concerns that a new wave of infections of the more contagious variant could spiral out of control. It says President Macron could announce new restrictions on Wednesday, and they could come into force before the end of the week. And the Trump administration's top environmental lawyer allegedly worked with the president to try to cast doubt on the election results. The New York Times is reporting he was planning to oust the acting attorney general and lend legal support to lawsuits challenging the ballot. He disputes these allegations. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, Xi Jinping is set to speak at the Davos Agenda event later today. The Chinese president's address, his first since Joe Biden entered the White House, could set the tone for relations between the world's biggest economies over the next 4 years. The French President Emmanuel Macron and the German Chancellor Angela Merkel are also lined up to speak at the World Economic Forum's online gathering. Well, joining us to talk about WEF, the World Economic Forum, is Jose Viñals. He's chairman at Standard Chartered. Mr. Viñals, as always, thank you so much for joining us. This is, I'm sad not to see you in person, but it's much more comfortable, I guess, than sitting in the snow in freezing temperatures as we have in the past. Mr. Viñals, if we talk about the banking sector and exactly what we've lived through in the last 12 months, Standard Chartered started this hybrid working from home model. How's it working?
Well, it's working very, very well. We bank in about 60 countries throughout the world, and we have had to adapt to the different local conditions. At one point, we've had about more than 80% of our global staff working from home. And thanks to technology, thanks to the excellent adaptability of our workforce, and the human resource practices that we have put in place at the group level, that has really worked very well. And it has been critical in allowing us to maintain our operational resilience through this very difficult year that we have just concluded.
Given the very difficult year, Mr. Viñals, how's the restructuring at the bank going? Are there any more jobs that will go?
Well, we have been undergoing a structural transformation already for quite some time. And as a result of that, a small number of roles are made redundant. So this is a process which is not new. It's something that has been going on and will continue in the future. But it's not related to the pandemic.
When you look overall at different regions and the speed at which they're growing again, or the speed at which they've been able to get back on their feet, what does it mean for Asia versus Europe versus the US? Is Asia so far ahead that it'll be very difficult to catch up?
Asia, particularly emerging Asia, led by China, has been at the forefront of the global economic recovery that we expect to see strengthening as the year advances. So I think that puts Asia, and particularly Asia Pacific, in an excellent position. And if you look back, emerging Asia, excluding Japan, has been contributing more than 60% of global growth over the past decade. This is something which I think is likely to continue going forward, even if advanced economies are set to recover. But I think that the key contribution of Asia will continue.
Mr. Viñals, how are you expecting the new U.S. President, Joe Biden, to deal with China? And does that change the environment for business?
I think that one should expect a lot of continuity, in a sense, in the U.S.-China relations. The rivalry will continue, but I think that the form in which this rivalry will be administered will be different. with a more multilateralist approach and more predictable approach on the part of the United States. And I think that's going to bring more stability to the relationship. The United States under Biden is not going to get easier on China, but I think is going to try to bring China to the table together with US allies to discuss things which are very important for them all. One advantage of this approach is that we're going to see much less scope for accidents and misunderstandings. And I think that this is very important for the world, even if the rivalry relationship will continue. And I think that this stability would be very good for everybody.
How concerned are you about recent developments in Hong Kong?
Well, Hong Kong will continue to be a very important international financial center. There are tensions there, but we have been very supportive of Hong Kong as a place to do business. And what we hope is that calm can be there for the medium term, and we will all benefit from it.
Give me a sense on, Mr. Vinyals, about the sort of dividend payment that you're looking for in 2021 compared to last year.
Well, we will abide by the constraints that have been set by our home regulator, the Prudential Regulatory Authority in the United Kingdom. So we will we will consider this in our board shortly, and we will do as much as we can. Our intention at the board is to do as much as we can given these constraints in order to resume the path of distribution of returns to shareholders that was interrupted last year because of the COVID crisis.
Mr. Vinyals, there's also been speculation about a succession plan for your chief executive. Can you update us on that?
Well, succession plans are good governance in any organization. And we have had BAU succession plans well before I came in for the chief executive of the bank. But let me tell you that he's fully focused on executing the strategy. Bill Winters has said that he's willing to see the strategy through. And he's very passionate about the bank, and we are delighted with him. So there is nothing else than that.
I know we're jumping around. There's a lot. I have little time and many questions. Maybe talk to us also a little bit about Brexit. How's that been going so far? What are the most obvious teething problems that you've seen?
Brexit is difficult for both the UK and the European Union. The good thing is that there was an agreement on a deal. Unfortunately, that is something which does not encompass the financial sector. And one of the very important things going forward is going to be what kind of agreement will the UK and the EU be able to achieve in order to smooth things out. I've always been a proponent of keeping a very close relationship between the United Kingdom and the European Union, even after Brexit, as close as possible. But I can also understand that there may be some areas on the financial side where the UK may want to seek divergence. But even if there is divergence on some areas, I think it would be important to be as close as possible in many other domains. I think that's in the interest of on both sides.
Has Brexit had an impact on your business yet?
Not really, because we reacted with a lot of anticipation to Brexit, and already for quite some time we have been operating our bank in Frankfurt since the first half of 2019. So this has allowed us to provide continuity of service to our European Union clients, and therefore we have been operating things quite smoothly.
Mr. Vinyals, maybe, if we finish the interview by me asking what kind of recovery you're expecting. I know it's very difficult, to see the vaccination, the rollouts, different countries going at different speeds. But are you more optimistic about 2021 in terms of health and kind of general economic recovery than you were 2 months ago?
Well, I think that we have discovered some realities and difficulties in the process of vaccination, also in new waves of the virus. So there is this race between the virus and the vaccines, which is going on. And I do hope that the vaccines will prevail over the virus. But this is not going to be immediate. There are going to be bumps on the road. And certainly I see a current year divided into two halves from the economic point of view. The first half, because of the health uncertainties, this is going to lead to an economic situation which may be not too dissimilar from the one we saw in the last quarter of last year. But then as the year advances and vaccination prevails over the virus, I hope that in the second half, we can see a return to confidence, more private spending, and therefore to have a stronger economy. So overall, I am cautiously optimistic that we will have a better 2020, both in terms of health and the economy. But the beginning is not as easy as we had anticipated about 2 months ago or so.
Thank you so much, José Viñals there, the chairman of Standard Chartered, with a very wide-ranging interview. Thank you for your time today. Now, coming up, as the world struggles with a public health crisis showing no signs of easing, how can we make progress on equality in 2021? Well, we'll also ask the French Minister for Gender Equality, Diversity and Equal Opportunities. That's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Deutsche Bank is probing the sales of certain investment banking products. It follows a report in the Financial Times about profit-sharing scheme that sold people risky investments they didn't understand. The paper reports the bank is investigating a broad pattern of misconduct rather than an isolated incident. Deutsche Bank says it can't comment until the probe is finished. Now, HSBC CEO is appearing before a UK parliamentary committee to answer questions over the lender's freezing of accounts linked to Hong Kong activists. A former lawmaker in the cities whose account was suspended says he was contacted by the panel and provided them with detailed information. HSBC has declined to comment. And Samsung's de facto leader, J.Y. Lee, has decided not to appeal against his prison sentence, putting him behind bars for the next 18 months. It marks an end to the long-running corruption scandal, with Lee accused of offering bribes to win support for his succession at Samsung. He faces a second trial over the merger of 2 Samsung units. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. And the rankings are in for the top hedge funds of 2020. The fund of funds, LCH Investments, has published its estimates for the industry and says the funds reaped $127 billion last year. Now, here with the details is our Danny Berger. Hi, Danny.
Hi, Francine. It was a very strong year for a lot of hedge funds. It's really the big theme we've seen, this big dispersion in returns. If you pick the right stocks, you could do extremely well, but many stocks did poorly at the same time. But the best fund out of all of them for 2020 was Tiger Global, bringing in $10.4 billion, according to LCH's estimates. Then we have Millennium, then Lone Pine Capital, and then Viking, all of them getting more than $7 billion in for the entirety of the year. One of the things, though, we immediately noticed when looking through these rankings is that one of the stalwarts of the industry is missing, and that's Renaissance Technology. They are a quant fund, and quant funds really struggled. In fact, it was the year of the human, and this is part of the reason why. These are factor correlations, and they are at the highest in at least 2 decades. In other words, things like value, momentum, growth, these things are starting to move more alike. So any edge you had by betting on one in particular, that starts to disappear. Indeed, it did disappear this year. So not only was it the year of big gains, but for most of those people who had big gains, Francine, they were humans.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the machines versus the humans. Now, I think we're just getting some breaking news out of vaccines, and this is out of Hong Kong. We understand through Hong Kong, actually, that Hong Kong authorities have now authorized this Pfizer-BioNTech vaccine for emergency use. Now, coming up, as the world struggles with a public health crisis showing no signs of easing, how can we make progress on equality in 2021? We'll ask the French Minister for Gender, Equality, Diversity, and Equal Opportunities. Our interview is next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's focus on the business of equality. France is reported to be set to go back into lockdown within days amid concerns of a new wave of infection from the more contagious UK variant of the coronavirus. So with a global economic and public health crisis, how can countries ensure that progress this year on improving diversity and further equality of opportunity? Well, joining us now is Elisabeth Moreno. She's French Minister for Gender Equality, Diversity and Equal Opportunities. And Minister, we are absolutely delighted to have you on today with such important work. I know you've done a lot of work on transparency. You've been trying to really, advance the cause not only for equality for women, but for all minorities. Give me a sense, Minister, about how much more of a setback the pandemic is for some of the efforts that you've put in place.
Hey, good morning, Mrs. Lacqua. It's really a pleasure for me being with you this morning. And actually, I mean, you know what we are living around the world. I mean, these events of 2020 have turned the world upside down and exposed women to terrible situations, but it has also emphasized the inequalities across the world. We are seeing vulnerable people in very difficult situations. And President Macron has, at the beginning of his mandate, decided to have the women gender equality or at the core of his mandate. And thanks to this decision, we have been able to work on many reforms in the past 3 years. And these reforms, who were made to improve gender equality, happen to be very, very important in this pandemic situation. And we have had a very holistic approach. We have spoken about security, we have spoken about justice, about health, about education. And the thing is, when you are in such terrible moments, you know that the rights of the most vulnerable people can be at very, very bad situation. And that's the reason why I'm currently working very hard on protecting women's health, on protecting their position on the economic market, but also working on discrimination that are currently increasing everywhere in the world.
But Minister, when you look at some of the things that you've put in place, which is indices to see the difference between men and women in the workplace, there are a lot of businesses and actually a lot of the unions in France that oppose quotas. How can you convince them that they are necessary to change?
Well, I come from, 6 months ago, before my nomination, I was the vice president of HP in Africa, and I have been in this tech world. So I can definitely speak not only to entrepreneurs, but to all the people who are not seeing the reason why it is so important to push the law and push the boundaries to make these things happen. And it's not only just to be at the table, sitting with the men and saying, well, I'm here at the table. It's because every decision that is taken today has to include men and women, simply because women are 52% of the global population, and every strategic decision that is taken is impacting their lives, and there is no reason why they shouldn't have a voice. This week we are celebrating the 10th anniversary of the French law for a minimum quota of women in administrative boards, and ongoing reflection. And this law has significantly changed the situation of women in the country, but only at the board level. And if we want to see our country improving in gender equality, if we want to see our country making the most of all the talents it has, I want to say that talent has no gender, it has no sexual orientation, it has no origin. When you are talented, whoever you are, you can have a seat at the table. And knowing the size,
Minister, Now, I also wanted to ask something that's really important. It's not only men and women, but actually does France need to be much more ambitious and display, have a transparency for diversity so that there's more diversity racially?
And that's exactly what I'm currently working on. France is a country that puts human rights at the center of everything it does. And we have all the core values to make these things happen. Now, everybody knows that in times of political or economic crisis, you see, all these equalities based also on ethnicity or origins and so on raising. And that's the reason why I'm currently working on a diversity index that will be given to companies so they can understand or they can have a true picture of how diverse their companies are, because giving people the possibility to study and the possibility to have access to a good employment are the two very basic and fundamental things we can do for every single citizen in our country. So this index will be a good tool for public or private companies to measure their diversity and put in place at the human resources level, but also at the top level of the company, to give them a true concrete picture of how they are behaving so they can put in place the right training, the right hiring approach, and so on and so forth.
Minister, thank you so much. Too short time, so you'll have to come back to talk about these very important issues. Elisabeth Moreno, there, the French Minister for Gender Equality, Diversity and Equal Opportunities. Now, we'll also be speaking to the French Finance Minister a little bit later today. I know maybe some of the conversation will touch on these important subjects we just talked about. 5 p.m. London time. We'll have plenty more, of course, at the World Economic Forum virtual Davos. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
The 2021 outlook darkens. The World Bank downgrades its growth forecast as new COVID variants, crippling lockdowns, and vaccine delays chase optimism away. Deutsche Bank says it is conducting an internal probe. This after a report that it intentionally sold clients risky investments they did not understand. And Davos goes digital. China's President Xi Jinping makes his first public remarks of the Biden era in the keynote address of the virtual summit. Merkel and Macron follow. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London. Tom Keene in New York. Tom, it's a Monday morning, and actually there's quite a lot going on. We listen to Christine Lagarde. We'll listen to the Chinese president and the French president, and we try and piece things together. It's also a snow day here in London, so we spend a lot of time throwing snowball fights. And it does feel like we're in a bit of a snowball fight situation with countries saying, well, we're doing the vaccine better than you guys are at the border. And we'll have to see exactly, cut through the noise to see exactly what that means for the recovery.
Cut through the noise, and the markets as well, very, very quiet. I should note there's a bid all in all to equities. It's a huge earnings week as well, Francine, but you're missing the point. I mean, I know we've got the leader of China speaking, quote unquote, to Davos today. Francine, you and I right now are supposed to be worried about what Tori's going to get us for lunch in Davos, the fine cuisine of Davos. And I mean, Victoria is in charge of lunch on this Davos week.
You know what, Tom? I love, so on the iPhones, you have memories. So I saw memories. So, yesterday I was looking at memories from like Davos 2020, 2019. And actually it was amazing how close we were to one another. The space, the newsroom in Davos is like as big as a shoebox, and we crammed like 40, 50 people in there. And I look at it, and half of me is like envious. It's like, oh, those were the times, pre-pandemic. But also, how close were we?
Well, we were very, very close. I'll be at the piano bar tonight in my dreams.
Tom, I think we're just getting also some breaking news out of Joe Biden.
Yes.
Now, we understand that, so this is, I think, third or fourth day in a row that at 5 a.m. Washington time, Joe Biden is signing some orders. About? And today, this is executive orders, now signing an order to boost federal spending on U.S. products, and it's to cover spending on about $600 billion in contracts. Tom, what's interesting is that if you look at the markets, they're all, waiting for these negotiations on the stimulus plan to see if it goes through.
It's a sense of normalcy, and folks, it's interesting to see day after day the White House beginning at 5 a.m. and the messaging through the morning of an attempt back to normalcy. I noticed Mr. Klain over the weekend, I believe on Meet the Press, the chief of staff for Mr. Biden, making really clear they are moving in a bipartisan way. But all in all, Francine, what is important is these are executive orders of real detail. In the media, as a general statement, we say, well, it's an executive order on immigration. But, folks, these are not just statements by a president. There's some real meat to these orders. Yeah.
There certainly is. So we'll have plenty more on that. Tom, I do miss the snow. I miss, walking in Davos with you. Hopefully we'll get to do it very soon. Let's get straight now to
Pharaoh's already fallen down in this hour.
Here's Karina Mitchell. Hi, Karina.
Good morning. President Biden is hearing it from Republicans and Democrats. Lawmakers say he needs to justify the $1.9 trillion price tag for his coronavirus relief plan. 16 Senate Democrats and Republicans spoke on a call with White House economic advisor Brian Deese. Moderate Republican Senator Susan Collins says she'll press the bipartisan group to come up with a narrower plan. Meanwhile, another milestone for the U.S. in the year-long fight against the coronavirus. Total infections have now exceeded 25 million, the world's highest total. That is roughly 8% of the population. The death toll has now exceeded 417,000. In Mexico, President Andrés Manuel López Obrador has tested positive for the coronavirus. The leader that Mexicans refer to as AMLO is 67 and says his symptoms are mild. López Obrador has generally held a lax approach to the virus. He's refused to impose mandatory lockdowns and usually doesn't wear a mask. And China's President Xi Jinping will deliver his first speech since Joe Biden entered the White House. Xi is speaking today at the Davos Agenda event. His remarks could set the tone for relations between the world's two biggest economies. The online event is being hosted by the World Economic Forum. The annual Davos conference has been put off till May and will be held in Singapore. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom, back to you.
Karina, thanks so much. Equities, bonds, currencies, commodities, and equities. Green on the screen, NASDAQ on the screen. Huge earnings week, and it's not just Amazon, Tesla, Apple, and the rest of them. It is across the board. I believe 100 of S&P 500 showing the flag here. Monday through Friday, we'll see that. I know Boeing's in the mix as well. NASDAQ futures do better. VIX churning 22.41. Again, the same thing. Yields in a little bit. A GDP report this week that could be a mystery as well. Where's Bitcoin? 33,000. Bitcoin.
Always on Bitcoin watch. If only we remembered our passwords, like Matt Miller, Tom. Markets starting the week a little bit higher. We do have tech shares climbing. Investors again focusing on the U.S.'s $1.9 trillion COVID relief plan. Now, the other thing I'm looking at, of course, is the U.K. I'm looking at crude oil as well. Crude oil climbing towards $53 a barrel, and the picture a little bit more mixed in Europe, actually. Equity benchmarks in France, Spain, and the U.K. turning modestly lower. I think it's about the lockdowns, Tom, and we haven't really figured out exactly what that means. Dollar and the euro pretty much steady. So we'll have plenty more on the markets throughout the day. But now to talk about the economy as if we were in Davos is Janet Henry, HSBC Global Chief Economist. Janet Henry, thank you so much for joining us. Always a good thing on a Monday morning to talk about what kind of recovery we'll see. At the moment, Janet, the market is closely following, of course, stimulus, expecting more from central banks, and kind of ignoring the lockdowns, ignoring the fact that vaccination rollouts could be slow. What kind of general world recovery are you expecting?
Well, I think that the financial markets are obviously focused on the idea that we're going to get more stimulus and a bigger reopening, and that even if things are bad in the short term, if anything, that means we'll get even more stimulus. So I'd say the recovery that we're looking at is that we've started the year on a softer footing, particularly in Europe, because much of Europe seems to have gone back into recession. But pretty much everywhere, we've seen some softening of GDP across much of the world. India's probably the only exception where things might have revived. And then through the course of the year, we've got something that's looking increasingly uneven, and to some degree being influenced by the pace of vaccination rollouts and by domestic stimulus packages, and even within economies, the pace of reopening will depend on what is happening globally. We know that international travel, for instance, isn't going to resume, so those economies that are more dependent on that will be held back further. So, yeah, we are looking for some degree of bounce back, but perhaps aren't quite as optimistic on the recovery, because even this short-term damage will have lasting implications.
I mean, a bounce back, Janet, once enough people are vaccinated, are we back to normal, or do you have questions about that?
In the short term, we know that there are some disruptions, even across Europe. You know, we can see that, you know, it's not just Israel, where there's over 40% of the population already vaccinated. In the UK, it's about 10%. In the US, it's over 6%. But in Europe, it's less than 2% in the major economies. And some countries, it's going to be very late in 2021. And in some of the poorest countries, it could even be 2022. So the later the vaccinations come through, then the greater those economies will be at risk to even more new strains that might materialize. And of course, you know, not everyone will necessarily take the vaccinations. So yeah, it matters. It's vitally important as hospitalizations come down and importantly death rates come down, more restrictions can be eased. But it will mean that, you know, it's not suddenly going to be one day everything returns to normal. It's going to be more spread out and more staggered.
Janet, I'm absolutely fascinated to go philosophical with you here on a snowy Monday in the United Kingdom. There's accommodative, and I guess central banks now are ultra accommodative. And then there's the stimulus everybody's talking about. But at the same time, there's an overlay on the conversation, particularly in the U.S., of almost austerity. How does austerity and the belief in austerity impinge on the stimulus to come?
We're not hearing as much about austerity now as we did, for instance, at the early stages of the recovery after the global financial crisis. But there is, I think, an acknowledgement that we entered this pandemic with a high level of debt, again, to varying degrees across different economies, and that debt burdens are now much higher, debt to GDP ratios. So while we know that extremely low debt service costs are making that debt very cheap to service, but when you look at future contingent liabilities, they go up a lot. So it's kind of, we know we need to get round to this at some point, but don't worry yet. Keep spending, keep borrowing, seems to be the message.
Janet, not to get all World Economic Forum on you, but let's go there right now and pretend we're in Davos. Basically, the stimulus is to help people that have been clobbered, and the austerity is the haves who have been pretty much the same or even benefiting from this crisis. I mean, the social partition of the demand for stimulus versus the demand for austerity is striking, is it not?
Yes, it is. And you make a very good point, Tom. Even some of these figures we see about the vast amount of savings that could be unleashed. There are some really optimistic forecasts out there for suddenly, hundreds and hundreds of billions of dollars that are suddenly going to be spent. Now, I don't subscribe to that view at all, because a lot of those savings have been accumulated amongst the higher earners that are not suddenly going to spend it. A lot of people have accumulated more debt. They've had mortgage holidays, they've had payment delays and such like, and they've depleted any savings that they actually already had. And we know in this world that, as you say, the savings have been accumulated and the profits have been accumulated by the corporate sector and the tech sector in particular. And in with the household sector, they've been accumulated by the higher earners. And that's why we know eventually that's where the higher taxation will be coming through. We're already hearing noises about it in the UK, a bit less so elsewhere, but the direction of travel in the coming years is clear because of the likely income redistribution that will be underway that will ultimately, or should ultimately be more positive for long-term growth.
Should we worry more, Janet, about zombie companies?
Well, we always worry about the prospect for zombie companies, but we need to go back to where we were last April. Some companies enter the pandemic already looking quite vulnerable. Some companies, and again, a lot of this is in the small and medium-sized companies rather than those big companies that are listed. Most people are employed in small companies, and they've been made very vulnerable by the government-imposed restrictions from a public health point of view. And now, as we emerge from the pandemic, hopefully in the course of 2021, to some degree, governments are going to have to take the decisions on the timing with which this support is pulled back. And the longer they leave it, then obviously that increases the risk that we get more zombie companies, which can, again, be quite damaging for future investment growth and future productivity growth.
Janet, thank you so much. We'll have plenty more, of course, with Janet Henry of HSBC, who stays with us now. Coming up through the week, be sure to tune into Bloomberg's The Year Ahead Summit. We'll be speaking to a host of guests, including the IMF Managing Director, Kristalina Georgieva. I think our Tom Keene is doing that. NatWest Chief Executive, Alison Rose. It all starts tomorrow, 7 a.m. in New York at 12 p.m. in London. And this is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong.
but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in snowbound London. Janet Henry with us with HSBC. And I want to tell you, folks, I mean, Francine went wild this weekend. 5 pence, 6 shilling to shovel the Lacroix sidewalk. Your kids did a great job, Francine. I mean, you just killed it.
We live in London, not Vermont. I mean, we had about this much snow. Of course, the whole street acted as if it was, some kind of scene of like Soviet Russia with, kids like throwing snowballs at each other. I mean, the level of excitement, Tom, was unreal, but it literally lasted 2 hours and then the snow was gone, just like that.
Does London have snowplows? Seriously. I mean, they just don't have snowplows, right?
No, they don't. I mean, I remember a couple of years ago, it must have been 3-4 years ago, when Boris Johnson was still mayor of London, and we must have had, 40 centimeters of snow, and of course, Heathrow shut down, and, all the airports actually in London shut down, and the buses had to stop because we just don't know how to deal with it. We don't have, defrosting machines, Tom. We have very clement weather here in the UK.
Sounds like Washington.
Rainy.
Anyways, rain coming, and then I think more snow, whatever. That's your weather report for today. Janet Henry about ready to walk off the set with HSBC and their global chief economist. Janet, what will you listen for from the president of China today? He's going to do a Davos equivalent speech. Francine and I were there when he last spoke in Davos. And honestly, folks, the valley stopped for the attendance of the gentleman from China. Janet, what will you listen for today?
I'm certainly not expecting any surprises. We'll see what his outlook is. He'll be talking about some of the pressing global issues. I'm sure there'll be things like climate mentioned. There'll be issues to do with long-term growth, and I think nothing controversial. I think is likely to come through from that.
Well, that's safe, but what's so interesting, Janet, is there is a projection, or maybe almost a mystery, of offense by China, whether it's naval, South China Sea, up and over to Taiwan as well. From where you sit and where HSBC sits with your expertise, is this a more assertive China?
I think broadly it seems to be, but I think China's main focus is the long-term prosperity of its country, and we've seen that just in terms of its approach to policy making domestically over the course of the last year. And indeed, even the amount of stimulus that China has delivered in its economy relative to what it's delivered in the past, when a lot of they delivered in the wake of the global financial crisis, was about really supporting the global economy, and indeed back in 2015, 2016, getting a much stronger growth. Whereas this time around, it has been more cautious. They are one of the countries that's already got an eye on financial stability and has been more supportive of investment spending rather than just kind of temporarily boosting consumer spending. And I think that's really the major focus. It is ensuring that the economy continues to grow, but not too strongly, but because they're worried not where growth is going to be in 2021, but over the course of the next decade and beyond.
Janet, what does that mean for, if you look at the pandemic and where China is at now compared to the US or Europe in terms of recovery, can the rest of the world catch up?
Well, it's interesting. And I think this, especially in the context when people are just focusing on the fact that we've got some short-term damage to growth and then we're going to get some degree of bounce back. And you'll see GDP forecasts for the US, whether it's 3% or 6%. So it really depends on where we've come from. As you say, China's already back above pre-pandemic levels. And on our projections, the US will be by the end of 2021. For the Eurozone, it will be the end of 2022. But within the Eurozone, big divergences. Germany, we think they will get there, a good year or more before, France or Spain or the UK. So there will be varying degrees. And eventually, I think that's ultimately what markets will focus on. And this feeds back to your point about zombie companies. The long-term damage to economies will gradually become apparent if they don't get back to where they were or where they thought they were going to be for several years to come. That's when you start to see the lasting impacts on labour markets, the lasting impacts on investment and productivity. And at the moment, China's clearly reviving more quickly. But even in China, we think they've seen the biggest acceleration. In China, this kind of sequential improvement will be slowing from here.
Janet, thank you so much. Janet Henry is HSBC Global Chief Economist. Much more coming up. There is a global sense here, an incredibly busy U.S. week, the Fed meeting coming up, but as well, centered around Davos and the World Economic Forum. David Malpass, the World Bank president, a good conversation with David Rubenstein. Look for that. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Another potential scandal at Deutsche Bank. The German lender is investigating complaints that some bank employees sold risky investments to clients who didn't understand them and then shared the profits. According to the Financial Times, the probe centers around a former employee. The newspaper says it appears only Spain and Portugal-based clients were affected, however. And when it came to hedge funds last year, trading conditions appear to have favored human stock pickers over algorithms. Tiger Global Management placed first in a world hedge fund ranking. It generated $10.4 billion for clients after fees. Millennium Management was second. Quant powerhouse Renaissance Technologies fell from the ranking of 20 firms. Some of its public funds lost more than 30% last year. And cryptocurrency enthusiasts counting on Bitcoin to bounce back above the 40,000 face a challenge. Demand is slowing for the biggest fund tracking the digital asset. JP Morgan says the pace of flows into Grayscale Bitcoin Trust appears to have peaked. The fund slid 22% over the past 2 weeks ending Friday. Bitcoin fell 17% in the same period. And that is the Bloomberg Business Flash. Francine.
Karina, thanks so much. Let's have a look at the markets. Now, it is Monday. There's quite a packed week coming up for you. Not more about central banks, but actually we'll have a number of important speeches from the virtual World Economic Forum. Markets starting the week on a green. Of course, tech shares climbing. Investors here in Europe, but elsewhere, definitely focusing on the relief plan over in the U.S., see whether it goes through, as is at $1.9 trillion. And I'm also looking at, so Bitcoin rebounding above 33,000. Tom, I think you have it in your data check, and quickly, oil at $53 a barrel.
Yeah, earnings this week as well. 100 of S&P 500, I believe, reporting. You'll see the major techs report starting tomorrow. Coming up, Thomas Gift, UCL, on the state of Biden's Washington. This is Bloomberg.
For a typical clothes wash, up to 700,000 fibres can come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc, une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles, et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. Interesting week. Again, earnings out front in the U.S. A lot of global action as well. It is a Davos agenda. We'll have some interesting conversations set up through the week. Right now, on the new Washington, maybe the same as the old Washington, Thomas Gift joins us with UCL for a briefing. Thomas, I've got to start with the impeachment. I believe we'll see the ceremony today of the impeachment team as selected by Speaker Pelosi. And they make that famous walk. I guess there's a British equivalent across the rotunda. They don't go into the Lords don't go into the House of Commons, whatever they do in London, but they're going to transfer the documents over to the Senate. What will that signal for the former president?
Well, it could signal the beginning of the end of his career in politics, if in fact he would be convicted. However, I think that that is very unlikely. Mitch McConnell has reportedly said privately that he wants Trump gone, but I think that the odds of that happening are very, very low. GOP senators, many of them will be up for re-election in 2022 in the midterms, and a vote against Trump will not help them with a sizable block of the GOP voting base. For a while, we've heard reports that there were whispers in the hallways of Capitol Hill that Republicans would turn on Trump, or that privately they don't like him. But saying that privately and doing it publicly are two totally different things. And I think we have to look at the track record here. And the track record is just that Republicans, when the stakes are really high, have Donald Trump back.
The other thing that, and folks, I'll be honest, this is a mystery to me. I've yet to see a really good treatment of this. Thomas Gift, what does 50-50 mean in the Senate? Like, are they arguing about who makes coffee?
Well, 50-50 de facto means that Democrats have a majority because the tiebreaker goes to the vice president.
I get that, but what's it really mean?
Well, I mean, I think it means to some extent that Democrats will still have control of the legislative agenda, but by all accounts, on most bills, you need 60 votes because there's this always threat of a filibuster. And so if you don't have 60 votes, you basically are required to get bipartisan consensus on virtually all sorts of legislation that you want to get through. I mean, 50 votes does help them also with the cabinet confirmations, which is something that, of course, is high on the agenda for Joe Biden right now. But if you want to get anything done in Washington, it still has to be, at least to an extent, bipartisan.
What will the stimulus look like?
Well, I think the stimulus really depends on how hard Biden wants to push this. I think he has a choice to make. Does he want to try to ram through a large stimulus, or does he want to start out this term on a bipartisan basis? Because I don't think he can really do both, Francine. On the one hand, Biden has said for a while that the last stimulus was only a down payment and that there's a greater risk of doing too little than doing too much. On the other hand, his whole message has been about unity and reaching across the aisle, and critics will blame him if he tries to push through a hyper-partisan bill, because reports are the Republicans are really balking at this $1.9 trillion figure. It's really tough for a Democratic president on these spending bills. When a Republican is in the White House, I think the president tends to get a bit of a pass on the deficit issue, but when it's a Democrat, Republicans all of a sudden remember that they're supposed to be fiscal hawks. So I think it really does depend on how hard Biden wants to push this $1.9 trillion figure.
Yeah, but Professor, what I can't figure out is that, as soon as the 1.9 trillion was out there, then you had moderate Republicans saying, no, they were against this because it was too much. But then you speak to people within the Biden administration, and they said that they had crafted it so that it would get bipartisan support.
Well, I think that the message from Biden isn't surprising, but I think that the reality is $1.9 trillion is just too much. I mean, we saw in Stimulus 1.0 and Stimulus 2.0 that there was considerable Republican opposition for numbers that were less than that, and they ultimately kind of met in the middle. This is kind of part of the spin, I think, that Democrats are trying to put on this bill. But I don't think that there's any way that you can get a $1.9 trillion stimulus through with Republican support. It's going to have to water down to an extent.
One final question. Thomas Gift, you're a great student of third parties in the United States. Essentially, they're anathema. Can President Trump launch a third party?
I don't think so. I mean, he wants to keep this threat open because I think it gives him some leverage, particularly in this impeachment trial. But, you know, if you look at our history, just the way that U.S. politics is set up, single-member districts, first past the post, political science kind of guarantees that that converges on two parties. So, you know, you get threats here and there, and you may have some politicians who make some headway, Ross Perot, Ralph Nader, et cetera, but you just can't win without the party machine behind you. And if you're Donald Trump, if you're someone else, it's just an uphill battle. So you have to stay, I think, within the confines of these two major parties.
Professor Gift, thank you so much. Thomas Gift at UCL, a briefing on Washington this morning. Lots to talk about there as well. I love, Francine, what Kit Juke said, the idea of is it a bubble? Clearly the zeitgeist right now, it's a bubble, it's not. Lisa Bramowitz, Francine, is just mental about this. Unsustainable excess, says Goldman Sachs, among others. It's a bubble, Francine. Kit Juke says no,
yeah, but
it's semantics.
I know. The thing is that whether it's a bubble or not, it doesn't matter. It's whether the bubble bursts, because you can have a bubble that, and you could argue that we've been in a bubble for the last 2 to 3 years. The problem is the inflection point at which is no longer a bubble, and you reprice.
It's a bubble. I'm looking for an entry point. I haven't found it yet. Futures up 10, red and green on the screen. With our first word news in New York, Karina Mitchell.
Okay, Tom, thank you. There are signals that President Biden faces challenges in enacting his proposed $1.9 trillion coronavirus relief package. Both Republicans and Democrats on a call with White House economic advisor Brian Deese asked for a justification of the size of the proposal. One Republican Senator, Susan Collins, says she'll see if the bipartisan group on the call can come up with their own plan. Meanwhile, Boris Johnson and Joe Biden struck different tones on the prospect of a trade deal between their two countries. The British Prime Minister was the first European leader to receive a phone call since the inauguration. The UK statement on the call says the two discussed the benefits of a potential free trade deal, but the US statement didn't mention trade. A new trade deal with the US is a top priority for Boris Johnson. And China has now overtaken the U.S. as the largest recipient of foreign direct investment. A United Nations trade agency says that global investment flows plunged 42% last year because of the coronavirus pandemic. The U.S. and Europe lost ground, while China gained. And in Russia, the Kremlin downplayed nationwide protests demanding the release of jailed opposition leader Alexei Navalny. Western governments protested the detention of thousands of demonstrators. Meanwhile, tens of thousands of protesters battled riot police in freezing temperatures. They had been warned they could face charges of mass disorder for taking part. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Tom.
Karina, thanks so much. The White House just releasing the president's schedule, and just to give you a tone here, 11:30 this morning, the president will consider the defense of the nation with his new Secretary of Defense, General Austin, and also the chairman of the Joint Chiefs of Staff, General Milley, that in the Oval Office. Coming up in the next hour, in defense of the Republicans, Brian Steele will join us of Wisconsin. That's at 6:30. Red and green on the screen. Nice pop to the NASDAQ this morning. We'll watch that carefully. This is Bloomberg.
Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Bloomberg Surveillance on a Monday morning, ready for a busy week. Francine Lacroix in London. I'm Tom Keene in New York. Sometimes on a Sunday, you let stories drop of regulation, malfeasance, civil, criminal things of that nature. So there was a story yesterday, this from the Financial Times, again on Deutsche Bank. Elisa Martinuzzi joins us with Bloomberg Opinion on once more Deutsche Bank in the news. Elisa, it's got to be the question for all of global Wall Street today. What is in the oxygen, the air of Deutsche Bank, where they're constantly running into problems like moving sophisticated derivative instruments to unapproved customers?
Well, we have to be a little bit careful before we draw, any substantive conclusions. Because of course, these are allegations that they're probing internally. But of course, this does seem. I think what's striking about it is it does seem a reiteration of something that we saw many times in previous cycles. Investment banks in particular selling, products to a unsophisticated clientele that it is somehow, convinces that it is sophisticated and it's able to take on more risk. And we saw this, for example, in the 2000s with the municipalities taking on swaps, mostly, across Southern Europe, in what seems to be a repetition, yes, of the same practices. I think what you have here potentially is the pressures on the investors on the one hand, desperately looking for yield, and on the other hand, you have, Deutsche Bank, which is still under a lot of pressure to prove its business model, to get back on solid footing. And this is a pocket of business, complex financial products, which it does very well. And so you have those two potentially pointing, those two interests meeting.
I look at this, and I want to go back again to, I get it, it's allegations, I get it, it's unfounded and all that until it's proven, but is it just a question of pressure to make revenue, or is it a question of we're number 5 in the pecking order, we got to get the number 2, let's go. What's the psychology at the bank that has led to this scandal after scandal after scandal?
Well, this is what, the questions will be for management, for the supervisory board. Has the have the drivers really changed? Is the institution now more focused on controls and more focused on doing the right thing that it may have done in the past? And those are also going to be questions for the regulators. In this particular case, you're looking at BaFin, but also the ECB. Do they have the comfort that management is pushing through the kind of change that it needs to make to put, years of reckless and potential, and unbridled risk-taking to rest?
Well, Elisa, what does it mean for management? So if this is indeed found, to be wrongdoing, who will pay?
Well, it really depends on the breadth and the scale. Is this a widespread issue across Deutsche Bank in more than one market? Does it involve, how many people? And most importantly, how senior were those individuals within the organization? And until we know that, it's really difficult to tell what the, potential repercussions on management would be. But of course, the more widespread, the more senior, the harder it is going to be for Deutsche Bank's management to distance themselves from this.
Is it more likely, and I know it's very early days, as you rightly say, these are allegations, we need to dig deeper, there will be a number of investigations on this, but, how does that play into the narrative of these are companies that actually have to merge to readapt?
Well, clearly, it does beg the question as to what has been driving Deutsche Bank's very strong performance in the investment bank. Is it that they are, as they say, growing market share with, the top world clients, or is it that they are, finding ways to mint revenue, with a more sort of short-termist approach? I mean, that's really what the question is going to be. And don't forget, Deutsche Bank was trying to, with the latest reorganization, somewhat pivot away from the reliance on the investment bank, and yet as 2020 showed us, they're very much counting on fixed income business in particular to drive the top line.
Elisa, thanks so much. As always, Elisa Martinuzzi there of Bloomberg Opinion, who focuses on banking. Now, coming up on Bloomberg Markets a little bit later today, Bruno Le Maire, the French economy minister. I'm sure he'll be fielding a question or two about banking. That's at 10:30 a.m. in New York. That's 3:30 p.m. in London. And this is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Royal Philips says it expects growth to remain resilient in 2021. The Dutch company has been bolstered by acquisitions and a record haul of contracts to upgrade hospital equipment. The virus pandemic is driving a long-term shift towards virtual care that should boost demand for equipment that lets doctors look after patients remotely. In Hong Kong, equity traders just can't get enough of Tencent Holdings. The $950 billion giant is on pace for its biggest monthly gain. Traders are buying thousands of January call options that expire Thursday. They're also unloading their bearish puts. Tencent rallied 11% today. And say it ain't so. About 40% of people in London would consider leaving for another European country. That's according to a survey taken last fall by recruiter Adecco and YouGov. The findings underscore concerns that Brexit and the pandemic may make London less attractive to workers mobile enough to move. And that is the Bloomberg Business Flash. Francine.
Thank you so much, Karina. Now, the UK is considering tightening border controls to prevent the import of new strains of coronavirus. We're also just getting some headlines from the Prime Minister, Boris Johnson, here in the UK, saying that they need to protect from reinfection, and they are definitely looking at COVID quarantine hotels. Tom, I don't know whether this actually makes sense to an American audience, but it's something, for example, that Australia did. So you come out from abroad, or you come into the country in the UK, and you would have to stay in a hotel for about 10 days. I think that you pay for yourself before let in the country. This is very controversial, also because a lot of people are saying, well, why don't you just enforce a quarantine, making sure that people stay in their own homes before you go that extra step. Now, to talk about this, to talk about what works, what doesn't, vaccinations and the variants, we're delighted to be joined by Sam Fazeli, who leads our pharmaceutical coverage for Bloomberg Intelligence. Sam, thank you for joining us, as always. First of all, I'm seeing a number of reports on what countries are doing at the moment, France versus the UK versus Italy, and who's doing well and who's doing not. Who will win this 2 months from now? If you're doing badly today, does it mean that you're doing badly in 2 months?
Hey, good morning, Francine. I mean, who's winning? Obviously, Israel is far in the lead compared to any other country. But and you know, if they can do it, then so should anybody else be able to do it if they don't have political reasons that get in the way and also logistical reasons that get in the way. 2 months might be a bit too soon to try and see other countries do this, get that far. But you know, I think by the third quarter, and I expect, as you've seen in the U.S., the vaccinations pick up and have picked up significantly recently. This should be achievable, especially with the new administration in place.
Now, Sam, I don't really understand. If you just look at Europe, why are some countries so much better at vaccinating? Is it the distribution? Is it, first of all, access to doses of the vaccine? Is it how they're distributing it? Or, you know, what's the hiccup in a country like France that have vaccinated, I think, less people than the UK in the last 3 days?
Yeah, I mean, I doubt it's to do with vaccine doses, especially when you compare Italy to Spain, to Germany and France, because normally they should have all got a per capita equivalent number of doses from the European Union and from the deals the EU has done. So it can't be the availability of doses. Those differences have to do with the way that the different countries are managing their rollout, the bureaucracy that's in the way, how many times you have to see a doctor, and also some reticence on the part of the people, potentially.
Sam, Tom Keene in New York, good morning. When you look at the history of vaccines, tetanus, I believe, 1885, smallpox way back before that, across the history of vaccines, should we be surprised that this is a struggle to roll this thing out?
Well, I mean, we've had, I think that it should be a surprise a little bit now, given that we have a very modern healthcare system. And I think at the end of the day, it is not something that anyone has contemplated doing to 7.5, 8 billion people, at least for over 100 years. So I'm not entirely surprised, and maybe we're just expecting too much too fast. That's the worry I have.
I mean, Sam, I just went through this. You know, we made a small splash of it last week. Folks, I've had the first shot. I've got the second shot scheduled here in, I think, 19 days. Sam, I was amazed by the assembly line nature of the giving of the vaccine. And I guess no one should be surprised by that. Do we just need bigger assembly lines?
Yeah, so the more people you can put, I mean, it's just like a manufacturing suite, I suppose, Tom. The more people you can put through this, the better. But what we do need to also watch out for, people have to be kept an eye on for at least 10, 15 minutes after their inoculation in case they develop one of those allergies. You know, I've been looking at the data, and I think we're over 120 anaphylactic shocks reported so far, and that's on like 16 million doses. So it's not like a worrying number, but it's still something that has to be done. So if you can manage that, yes, just keep getting the throughput through, which is why you need the pharmacies to step in. There's one on every corner.
But Sam, how different is this from a flu vaccine? So does, you know, the protocol or the distribution in place for the flu vaccine, can you replicate it for COVID-19 apart from the cold chain?
Yeah, no, so the only difference for me is the cold chain. Other than that, you've got the same situation here that you have with flu vaccine. You do need a second dose, though. That's the problem. So you basically have to do twice as many inoculations, unless, of course, somebody comes back and says, here's Johnson & Johnson vaccine. Maybe this afternoon we'll hear it, or maybe tomorrow we'll hear the data. One dose, and it looks great. Let's go with that. So given the 2 doses, it does make it a bit tougher to try and put that many people through, but it is doable. I'm pretty sure we can do it. And I think the states, different states, I mean, look at West Virginia, are proving that it can be done.
Sam, in your head right now, where do we get to that tipping point where we can say all clear? I'm using that as an amateur. I want to be careful here. Where's your in your head?
I'm literally looking at my Excel file to get to about 70% of people vaccinated with 1 dose of vaccine in the United States at the current rate. I'm literally just looking at it now, 28th of August, 2021.
Okay.
At the current 7-day rolling average of percentage increases in doses, we get to 28th of August, 2021, 70% of people. And of course, that includes a lot of people with second doses, some with first doses still. So just to give you a ballpark.
That's really responsible. Dr. Fazoli, thank you so much there with a late August view. The Prime Minister of the United Kingdom looking at the calendar as well. Mr. Johnson says on target to vaccinate vulnerable groups by mid-February. That in itself is a pretty good achievement, I would say, Francine, to get out 3 weeks or so. In our next hour, Carl Weinberg, particularly Carl Weinberg on China, as Mr. Xi will speak today in the Davos agenda. Carl Weinberg on the new China, the new relationship with President Biden. Also, GDP this week. Futures up 13. Green on the screen. Stay with us. This is Bloomberg. This morning's stock futures signal, well, a bid on interest rates lower for longer and big tech forever. Various and sundry trillion-dollar companies, they report this week. One gloomster says it's, quote, almost like a last hurrah. Lisa Bramlett says it's a bubble. The Republicans, well, they want unity. The Democrats want a conviction. Trump impeachment managers will walk the walk across the Capitol and into the Senate chamber. And Tom Brady, well, he won't take Tampa Bay to the Super Bowl until London freezes over. Wait a minute, don't be tempted. Swindon, quote, bans snowball fights. Make a snowman instead. Good morning, everyone. Bloomberg surveillance from New York. There's no snow in sight. Look at that. They're so cute, Francine. Is there any snow still in the ground, Francine?
That's gone, Tom. I should have banned snowball fights. That's what I should have done. I didn't think about it. I got absolutely pummeled. My youngest was so aggressive. I think it's like, pent-up energy for the last 6 months in lockdown that he literally pummeled me with snowballs. That's the way forward. Just ban them, Tom. Focus on the snowmen and snow women.
True story. We started snowball fights outside Temple Brith Kodesh, I believe it was, in Rochester, New York, 1,000,000 years ago. And all of a sudden, the police showed up because we were throwing snowballs at the limousines of the Israeli prime minister at the time. It was the first time I was arrested.
Never a good idea.
This is the Lacroix household yesterday. Extraordinary emotion here. We're watching the Super Bowl, and I tell you, folks, it was a crisis to the north. Francine, they get a lot of snow in Scotland, seriously, in the Highlands, don't they?
Yeah, and actually a lot of the parts of the UK are just not, ready to deal with it. Those are pictures, Tom, not of London. They're way up north. Yeah. If you look at London, look, there wasn't much snow. There was, I think, about, 15, 20 centimeters, but it was pretty exciting.
What is that?
And give it centimeters. I know, it's so European of me, right? Do you even know what that means?
No, I don't, and that's why I got that quality C in science. Continue.
And Tom, there was not much snow, but the excitement of it, and then on Twitter blew up saying, look at the UK, they have this much, 3 inches of snow, and everyone's really excited. But there's not much to do. Remember, we're probably the most locked down nation at the moment. So, we'll take joy wherever we can.
And serious comments from the Prime Minister today, and of course some real danger and flooding, I should say, as well, north of London. Right now, with our first word news, here's Karina Mitchell.
Okay, Tom, we start in the U.S. President Biden is hearing it from Republicans and Democrats. Lawmakers say he needs to justify the $1.9 trillion price tag for his virus relief plan. 16 Senate Democrats and Republicans spoke in a call with White House economic advisor Brian Deese. Moderate Republican Senator Susan Collins says she'll press the bipartisan group to come up with a narrower plan. Another milestone for the U.S. in the year-long fight against the virus. Total infections have now exceeded 25 million, the world's highest total. That's roughly 8% of the population. The death toll has now exceeded 417,000. And in Mexico, President Andrés Manuel López Obrador has tested positive for the coronavirus. The leader that Mexicans refer to as AMLO is 67 years old and says his symptoms are mild. López Obrador has generally held a lax approach to the virus. He has refused to impose mandatory lockdowns and usually does not wear a mask. And China's President Xi Jinping will deliver his first speech since Joe Biden entered the White House. Xi is speaking today at the Davos Agenda event. His remarks could set the tone for relations between the world's two biggest economies. The online event is being hosted by the World Economic Forum. The annual Davos conference has been put off till May and will be held in Singapore. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Tom.
Karina, thanks so much. Equities, bonds, currencies, and GameStop. We'll get to GameStop in a moment. Futures up 13. It's a lift. NASDAQ 100's giving me almost 1%. 13,500 on the NASDAQ. I can't believe I'm saying that. Pharaoh's on the 3,900 watch for SPX, whatever that means. Yields, they churn as well. Dollar, I'm going to call fractionally weaker here. Sterling, I'll let Francine discuss, 136.96. GameStop, it's an Amazon equivalent. GameStop to the moon, up 51%. It's just that simple. Preliminary trading, I don't know. Pharaoh bought some. Who knows? Francine?
Yeah, I'm looking at markets. They're definitely in the green. I'm looking at tech shares, Tom, and actually something that I didn't notice before, Tencent was up some 11% after we had a bit of buying frenzy from Chinese internet stocks. The picture, look, in Europe, it is a bit mixed. I guess if you look at the UK, it's trending modestly lower because of these talks about lockdowns or even people having to quarantine in hotels for 10 days. We don't have a decision from the government yet, but certainly that's where the chatter is at. Dollar and euro pretty much steady, and then Bitcoin rebounding above $33,000, Tom.
Very good. We're going to dive into an eventful hour here right now. Because President Xi's speaking today, Davos agenda, we have Carl Weinberg with us. A lot of people trot out a China note because they're supposed to trot out a China note. Weinberg at High Frequency Economics has been committed to a super sharp China note for years, and he joins us this morning. Carl, what's the distinction today for Mr. Xi? I mean, there's a more assertive China, there's the tensions in the South China Sea and the new tensions with Taiwan. What's his message today, his to-do?
Yeah, so good morning, Tom. Good morning, Francine. Xi is going to speak at the virtual Davos, and he's going to be the first head of state to speak there, and he's going to be doing what U.S. presidents used to do at events like this, which is setting a tone of globalism, a tone focused on world trade, a tone focused on cooperation, on key issues like the pandemic, like the economic crash, like climate change. He's going to emphasize China's leading role in all of these areas. He'll probably mention that most of the masks that most of us wear to protect ourselves from this pandemic are made in China. He's going to speak with confidence, and he's going to take the air of an ascending world leader.
What is his domestic challenge? They just did a GDP statistic, you know, who knows if it's accurate, but a pretty darn good economy as well. What's his domestic audience that he will speak to today?
Yeah, so his GDP is backed up by data from industries showing automobile production is up, electricity production is up, rail freight traffic is up, all of the little industry indicators that back up these kind of GDP estimates. And whether the right number is 2.3 or 2.9 or 3.1 or 1.7, it's positive. The economy has grown, whether judged by industrial production or retail sales compared to where it was a year ago. You're hard-pressed to find another country on the planet that has that kind of GDP performance. And the figures that we're seeing coming from the provinces as estimates for 2021 growth are also confirming that they feel confident that they can move forward, that the virus is contained and containable. And those are two very important things that will be ready to grow again in the rest of the world when we can say that.
Carl, what makes you nervous about the future? I know there's this ongoing talk about valuations and whether we're in a bubble, we're not in a bubble, what would break it. But is there something deeply uneasy about where stocks are and actually what we're living through? We're in lockdown. You know, a lot of countries are not vaccinating as much as we thought they would by this point.
Well, Francine, I worry about three things. I worry about COVID, COVID, and COVID. And if you fix any of those three things, better get all of them, then I don't really care if the stock market corrects or not. The economy will be able to grow. People will be able to have jobs. And that means that even the people who aren't lucky enough to own a lot of stocks are going to be able to feed their families, pay their taxes, pay their rents, and move forward. So to me, it's all about COVID. But I just heard an estimate on your program about getting to August before we get a critical mass, the vaccinations. The problem is to stay alive between now and then, both as a person and as an economy.
But Carla, your job will, I mean, maybe not your job, but jobs will change. People are not necessarily trained. It could be also lower quality job. Not everyone wants to be an Amazon delivery person.
That's true, but right now the people who have mostly lost their jobs are people in the services sector, people in low-income jobs, people in hourly paid jobs, all right? And it's going to be hard to go much lower than that. We've wiped out key sectors of our economy, damaged them in ways that are going to take years to recover from. My focus, as you know, Francine, is on post-pandemic reconstruction. And when I look at President Biden's package, one of the things that I see missing from it is thinking ahead to the reconstruction of the small American businesses, the millions of them, the restaurants, the pizza shops, the retail shops that have been lost as a result of this, the individual entrepreneurs who have lost their self-employment jobs. We have to rebuild that, and that's going to take work and money.
Hey, Dr. Weinberg, Greg Villiers publishing moments ago, and he says the Senate is a total mess. Okay, we knew that, and Greg crystallizes it. And like you, he focuses on COVID and getting that fixed. How do you direct stimulus to the people who need it, the 1/5 flat on their back, as you say, they're trying to get to August, and also to reconstruct? Do you just assume a smaller near stimulus with a program to follow on that's literally post-Civil War reconstruction?
Yeah, I like the post-war reconstruction, whether you want to pick Civil War or any war. You know, we're in a war, and things have been broken, and we have to spend money and effort and coordinate rehabilitation, reconstruction efforts. All right, that's the kind of the scale of the program that we're going to need in the United States. Just throwing money at the economy and hoping that it's going to land in the right place, I don't think that's a good strategy. That seems to be the general criticism of the Biden package, and I agree with that. A lot of people will get checks as a result of that don't need that money. But if you focus the money on people who've actually lost jobs, if you focus that money on businesses that actually have been worth viable before but have become insolvent because of this, then you can bring them back to life.
Right.
It's much cheaper to do that than to pay all the employees of that business income support for years to come while they figure out what to do.
Carl, since we have you on, I have to ask about the transatlantic spread in inflation expectations. I went back a good number of decades, and it's never been wider. The disinflation of Europe versus the serious reinflation of America. What does that mean for our viewers?
Well, the inflation question is one to be determined. Every crisis has unique aspects, and this one is kind of a weird one because it's both a supply shock and a demand shock. All right, we can't get to work, so we can produce less. So supply is being shifted to the left, if you will. All right, being shifted downward, and that usually means an inflation pulse, a shock after some period of time. But demand has fallen by so much too that we have a lot of slack in the economy. For right now, demand is winning. For right now, the slack is the most important thing for price formation. I don't think inflation can get much traction in the United States. We are going to see a spike in CPI, yearly rates of increases, because of the basis effect from oil prices. Everybody knows about this already. So I don't think we're going to get a lot of traction right now. But if we emerge from this with a hyper-heated economy on the demand side by throwing too much money at the wrong places and waiting for it to get where it's going, we will be creating more money and more income than we are producing goods. And that can lead to two possible outcomes. We could get inflation, or we could get a bigger current account deficit. And my guess is we'll get a bigger current account deficit. And guess what, Tom? Guess who's going to make all the stuff that we're not going to be able to produce for ourselves, but we have income to buy? It's going to be China and other countries that are following this route.
Carl Weinberg, brilliant. Thank you so much for the high-frequency economics this morning. This on a day where President Xi speaks to the Davos agenda. Coming up throughout the week, conversations in this odd year. It's a Bloomberg's Year Ahead Summit. Among our guests, Allison Rose from NatWest, Mr. Fink will join us, Lawrence Fink from BlackRock. And on Thursday, I'll be speaking with the managing director of the International Monetary Fund, an important time to catch up with Dr. Georgieva. Please stay with us. This is Bloomberg. Good morning.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong, but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Surveillance from London, from New York, a busy Monday. We get ready for just the most interesting week, and part of that is earnings. The mystery of earnings, and we'll have this. T-Live is world-class. They'll come out and do the hyper-analysis of everything, say, on Amazon, on Apple, on Microsoft, and all that. But beneath it will be a social commentary of where these companies are right now. Alex Webb is excellent at this with Bloomberg Opinion, of delving from the finance over to what we're actually doing. Alex, is it sustainable, the COVID growth, or do guys like you look at it almost as a one-off growth bubble?
I think the growth, certainly, having got this business, I think there's a high probability they retain it. I think it's unlikely they can maintain this pace of growth, certainly. The question that everybody's going to be asking themselves right now is how habit-forming this has been. You know, people started buying things with Amazon, they've seen how easy it is, and they go, actually, what do I need to use a supermarket? I think that there's inevitably going to be a bit of nuance in there. Yeah. We'll see there are some things where you know, I can buy this on Amazon, it's going to be fine. Other things, like food, for example, you know, people like to be able to pick which apple they're getting, which meat, what the best before date is, all those sort of things. I think that there will therefore be a certain kind of correction out of some Amazon products, you know, when lockdowns start to work properly.
Alex, Mark Gurman has led the technology world with his reporting on innovation to come at Apple. Do we underestimate, among all these technology companies, the cloud and the rest of it that you're excellent at, do we underestimate the future innovations, say, out 5 years?
I mean, we haven't historically. You know, 5 years ago, people were skeptical that Apple would have a new killer product in 5 years. Needless to say, they don't have a new killer product. But what they have managed to do is just, eke incremental innovation out of the products they do have. And I think if you look at the augmented reality, virtual reality products that Mark has reported brilliantly are coming down the pipeline, they are really ways of ensuring that you keep buying an iPhone. You know, the Apple Watch, yes, they make money on it, but once you have an Apple Watch, you are less likely to trade your iPhone in for an Android. I think it's going to be a similar sort of play with smart glasses. These are all, you know, satellite devices around your iPhone. That continues to be the moneymaker, and I think probably will be for a long time to come.
Alex, what do you make of some of these Chinese tech companies? So I think Tencent was up some 11% today. Now, partly this is a simple, you know, trader frenzy story in China, but it's, you know, where will it be in 6-7 months from now?
We are seeing this huge pushback from, you know, the regulatory authorities in China, slightly concerned about these gargantuan scale and power of these companies. I think some of the corrections we're seeing, you know, we've seen a bit of pinging around in the market as, you know, investors try to work out whether this regulatory threat is a threat to the you know, valuation of the stocks. Perhaps we're seeing that, you know, there isn't like to be a massive correction. clearly the regulators in China are looking at the experience in the US, where it's quite hard to crack down on Google, Facebook, Apple, Amazon, just because they are so gargantuan in size and influence. And perhaps there'll be a check on some of the pace of growth and particularly the new businesses into which these Chinese companies can extend themselves, given that fear at the top level in Beijing.
Alex, does the Biden administration change the trajectory of Chinese tech companies?
I mean, if the trajectory is cracking down on them in the US, not necessarily. I think we'll see a few nudges on the tiller. It'll be a little bit more, again, nuanced the way they approach it. I don't think we're going to see Huawei coming into the US. I think the pressure on companies outside the US to stop them supplying particularly hardware to Chinese companies, I think that will continue. I think the likelihood of crackdowns on TikTok, though, for instance, I think that's probably less likely than it was under the Trump administration. But, we're still sounding this stuff out, and it really depends on, who gets appointed into what sort of roles. The DOJ cases against big tech seem to be continuing, so there's no indication that the efforts against China will change trajectory significantly.
Alex, thank you so much. Alex Webb, there, our Bloomberg opinion columnist, of course, focusing on technology. Now, coming up, the World Bank President, David Malpass. You can catch that interview throughout the day. He'll be in conversation with David Rubenstein. The focus on the economy and, of course, on scarring. This is Bloomberg.
Y lo más increíble es eso, no solo estás sintiendo frontalmente, sino que en la espalda también, entonces a lo mejor estás jugando y sientes que por detrás te pasa algo, entonces...
Y ver cómo te tiran algún objeto o cómo notas la sensación, ¿no? Como que te golpean a ti. Yo creo que hace que empatices mucho con los personajes y que sea todo mucho más real.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Another potential scandal at Deutsche Bank. The German lender is investigating complaints that some bank employees sold risky investments to clients who didn't understand them and then shared the profits. According to the Financial Times, the probe centers around a former employee. The newspaper says it appears only Spain and Portugal-based clients were affected, however. And when it came to hedge funds last year, trading conditions appear to have favored human stock pickers over algorithms. Tiger Global Management placed first in a world hedge fund ranking. It generated $10.4 billion for clients after fees. Millennium Management was second, and quant powerhouse Renaissance Technologies fell from the ranking of 20 firms. Some of its public funds lost more than 30% last year.